S&P 500 extending gains up to 0.3% now.
Ready? Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. The hearing is titled The Federal Reserve's Semi-Annual Monetary Policy Report. We like creative titles here, and that is our traditional title for Humphrey Hawkins. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I'll note at the outset this hearing has a hard stop at 1 p.m., which we will strictly observe, which seems only humane. I'll now recognize myself for 4 minutes for an opening statement. Thank you, Chair Powell, for being back with us today. With prices increasing more than 20% since President Biden took office, inflation remains top of mind for American families. In fact, only a quarter of Americans describe current economic conditions as good or excellent.
It's just like the first migraine I've gotten here. It's really, really bad.
Economic confidence index.
Had me bedridden.
Despite President Biden's gaslighting, inflation was not 9% when he took office. It was out of control. The out-of-control inflation we're experiencing now is something that this administration did not inherit, but is a product of their policies and their overspending. The nearly $2 trillion partisan and fiscally reckless spending as a part of the American Rescue Plan poured fuel on a smoldering inflationary fire. After a delayed response to runaway inflation, the FOMC has acted with a historic pace of interest rate hikes to ease the pain caused by Democrats' failed economic policies. It is a response, not the actual disease, but the response the Fed is trying to tame these flames, but it's a response to Democrat policies here on Capitol Hill in the administration. So far this year, inflation has been more persistent than many, including the Fed, previously expected. There's still work to be done to reach the Fed's 2% target. As I've repeatedly said, the Fed's, as I repeatedly said, the commitment to independence of the Federal Reserve is of utmost importance, and it is critical, especially in a political year like this. Just as, Chair Powell, just as you did in previous administrations, you must not allow politics to cloud the Fed's monetary policy. However, despite your best efforts, the Fed independence remains at risk. And unfortunately, calls are coming from inside the building. Under Vice Chair Barr, the Fed's regulatory and supervisory agenda has become politicized. Most notably, the development of the Basel III endgame proposal has been a mess. This process has been cloaked in opaque standards and timelines set at meetings of unaccountable global governance bodies. The Fed has promised to process 410 almost universally negative public comments regarding the unjustified and underutilized initial proposal, or an underanalyzed initial proposal. Recent press reports, which seem to be the only way Congress gets details on the Basel III endgame progress, and your comments yesterday indicate the Fed will finally conduct a long overdue quantitative impact study. That is welcome. And if true, this is a promising development. Chair Powell, the last time you testified before this committee, you stated that the initial Basel III endgame proposal will undergo, quote, broad and material changes, end quote. Yesterday in the Senate, you said the board supports reissuing the updated proposal for public comment. I'm concerned that press reports also claim the Fed will tuck any changes to the proposal into this quantitative impact study. That study, including the substantial changes to the proposal, would then be issued for public feedback with relatively paltry comment period. I'll reiterate to you here what I've said to you in private. Broad and material changes to the Basel III endgame necessitate a full reproposal, full stop. Full stop. Failure to do so will result in an immediate Congressional Review Act vote out of this House of Representatives as quickly as we can possibly process it. Now, it doesn't have to be this way, and I think the Fed adhering to its longstanding principles here is highly important, especially with this interagency process. I'll close with this. Your steady and capable apolitical leadership of the Federal Reserve has shepherded our economy through extreme uncertainty. We now find ourselves in the midst of a new type of uncertainty surrounding the leadership of our nation. Doubts, fears, and panic often lead to bad decision-making and even worse policy. I urge you to reject outside political pressure in this volatile time and stay the course for the good of the American people and our economy as a whole. Thank you for your service, and I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters.
Thank you very much, Mr. Chairman. Welcome back to the Honorable Jerome H. Powell, Chairman, Board of Governors of the Federal Reserve System. Chair Powell, as we saw with the latest jobs report, the labor market remains strong and the economy is surging. Despite inheriting an economy from the prior administration that had the worst jobs record since the Great Depression, President Biden has now overseen a record 15.7 million jobs created since he took office, with 206,000 new jobs created just last month. Not only that, but under the Biden administration, we're witnessing low unemployment rates, rising wages, and stabilizing prices for goods and services. This is not only because of President Biden's strong leadership, but also because of the historic legislation signed into law by President Biden, which has resulted in lower costs, created more jobs, rebuilt our infrastructure, supported small businesses, eliminated
He's
most
speaking is
injustices,
85 years.
wiped out more than $144 billion in federal student loan debt for 14 million borrowers, and cut child poverty in half. President Biden is and will continue to advance policies that are providing good-paying jobs and an economy that works for everyone. Now, while I'm pleased to see that inflation is declining, the latest data makes clear that housing remains the
They
number
all
one
are, man.
driver of core inflation. Since 2020,
Crazy.
house prices have increased by nearly 50%, with Americans now spending, on average, over 30% of their income on housing. This is a top priority for Democrats, but remains an
I
afterthought.
honestly think it was higher than 30.
Earlier this Congress, I reintroduced my comprehensive legislation housing package, including the Housing Crisis Response Act. This bill provides more than $150 billion in fair and affordable.
Got new 15s opening in 30 seconds here.
Representing the single largest investment
We have a decent amount of
in our nation's history. These funds
we have
will
an
create
attempt
nearly
at
1.4
absorption over here at these
million
highs. What we need to see is the ability for
bring down housing
buyers
costs
to ideally hold like this 85, 90 area
Committee Democrats
into the new 15 and make it supportive, or it makes a lot of sense to have to come back down to 69 if we can.
Extreme MAGA Republicans are not just ignoring housing inflation, they're
Just kind of waiting it out.
Project 2025
You can see what I'm looking at here in footprint. This very neutral tone, so coming back down to these buyers. Come back down. Green.
Former Trump White House staffers and Trump
If this POC fails. So if we can bid here at POC, should be able to get continuation and keep going up. But
CEO recently declared that they are, quote,
minute,
the process
rejecting our
of
30-second
setting
opening
the
range high,
position
and are now back down at our low.
if
Why?
the left allows it to be quote unquote. And if that
So getting a bit of divergence here with NQ
we heard
RTY,
in the lead up to and on
but holding
January
POC from the
2020, it should.
so far.
Project 2025 promotes radical ideas to materially undermine the Federal Reserve, if not effectively abolished. MAGA wants to put you out of a job, Chairman Powell. So I look forward to your testimony and hearing from you, a Republican who was first nominated by President Trump, about your thoughts on the importance of the Federal Reserve and the work you have done to help our economy. And I yield back.
Gentleman yields back. I note for the record, Jerome Powell was initially nominated by President Obama to the Board of Governors of the Federal Reserve before being nominated by President Trump to chair. So here we are. We'll recognize the chair of the Financial Institutions Subcommittee, Mr. Barr, the Andy Barr variety, for 1 minute.
Thank you, Mr. Chairman. Welcome, Chairman Powell.
Yeah, so we're filling this right now. Again, I think having to come back down.
Continue to hammer Americans.
It's like 69 area.
Paycheck to paycheck. Workers and families feel the pain, making everyday purchases at high
I'll have to see if there's any more. As your first like area buy side trying is going to be the 77, right? Of course, with the Swick high, but we should see then a reoffer and then a push back down.
I am pleased that the Fed is resolute in getting inflation under control. I am pleased that you have committed to an apolitical approach to this. I am not pleased by the Fed's opaque, unjustified, politicized, and underanalyzed regulatory proposals, which will ultimately hurt all.
Give it a minute.
We need to know where the Fed is going.
This is our value high retest on yes. Russell leading us down. Now following.
Well, Chair now recognizes the ranking member of the Financial Institutions and Monetary Policy Subcommittee, Mr. Foster, for 1 minute.
Thank you, Chair McHenry and Ranking Member Waters. I'd like to also thank you, Chair Powell, for joining us today and for the role you have played in combating inflation and supporting a stable economic recovery. While the presidency is often the focus of political pronouncements about macroeconomic conditions, there's no question that undersells the importance and the independence of the work of the Federal Reserve Board. Well, actions taken by the President and Congress certainly play
I think a little bit more.
Monetary policy decisions made by an
Going back down into like this 4450, 45 area on ES makes a lot of sense where PVC is.
And work continues on inflation, but significant progress has been made to bring the country.
And then what you need to be careful for here is we need to see it bid off this area and then a push over our value up, or this is what's going to get a bounce. We now hit our value high as resistance, and then we get a rotation through.
Inevitable and far better, I should point out, than our peer countries. Democrats are committed to supporting your efforts to cut costs for American families. I yield back.
We'll now welcome the testimony of Jerome Powell, the 16th chair of the.
I really need to see this bid over value here. The hold of our 45s.
Presentation or testimony without objection, your written statement will be made a part of the record. You're now recognized for 5 minutes.
I'm actually going to go to a smaller time. It's skewed.
Appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report.
Same value now at yes.
Focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress.
Powell's speaking now.
The Reserve's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest
at 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast a build of 1 million on the prior draw of 12.157 million, with a range of a build of 2 million to a draw of 3 million. Gasoline inventories forecast a draw of 1 million on the prior draw of 2.214 million. Distiller inventories forecast a build of 0.5 million on the prior draw of 1.535 million, and crude Cushing inventories, prior a build of 0.345 million.
In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll job gains averaged 222,000 jobs per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54 and a strong pace of immigration. As a result, the jobs to workers gap is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past.
Are failing to get over value. Just a POC here on ES.
Total PCE prices
Looking like if POC becomes resistance, that we should see a rotation down to value low. We still need to see if it gets out or it's a sell side. Just
after a lack of progress toward our 2%
value push down. Now battling to let us know have a pushing down. I don't think there's a ton here. So again, we can provide supportive and our ETH high supportive and a secondary look, pushing back up. If not, then just a continuation of trend down. Right? Lower highs, lower lows. So we need to see break of this channel down and get us back outside of value. Value to be respected. So value high is above, halfway back, box.
We've also continued to
You're
reduce
at
our
35. You'll see
we decided to
the R
slow the pace of balance
open,
sheet runoff starting in June,
then value low,
consistent with
it's
the
down.
plans released previously.
Just waiting to see if we need that final rotation down.
Helping to bring demand and supply into better balance.
Just continue
Downward pressure.
outside channel.
The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little.
Bank of England's Pill says uncertainty about wage behavior in the UK is unlikely to disappear soon. Policy decisions need to be robust to this.
The committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with the operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Well, thank you, Chair Powell. I'll now recognize myself for 5 minutes. Chair Powell, let's begin with this question of the Basel III endgame. I know you got questions about it yesterday, but I think we need further clarity. Your testimony
At 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast a build of 1 million on the prior draw of 12.157 million, with a range of a build of 2 million to a draw of 3 million. Gasoline inventories forecast a draw of 1 million on the prior draw of 2.214 million. Distiller inventories forecast a build of 0.5 million on the prior draw of 1.535 million, and crude Cushing inventories prior a build of 0.345 million.
What happens then? Like, walk through the mechanics as you anticipated.
Okay, so we're very close to having exactly that agreement on the substance of the proposed changes pursuant to those talks. The next question then is how to proceed. And, it is my view and the strong view of a number of board members that the appropriate thing to do is to take that new proposal and publish it along with the effects of the quantitative impact survey and put that out for comment again and receive comment on that, and then take some time to review those comments before finalizing the regulation. And that's a discussion we're having with the other two agencies now.
Projected value high so far off of a hold of POC on ES. Again, need to see that ETHI
So
become
Hezbollah
supportive
says
if we're going
whatever
to get any
Hamas
higher
agrees
prices.
to, we will abide by it.
Similar situations. There aren't that many similar situations, but when we see broad and material changes to an important regulation, we think let's go out again and give all the commenters
Where we are. Right?
Yeah, and that also
Need to see this become supportive on a look over and then pop.
risk that Congress step in.
Or this is all we get, right? We are inside balance. So, a failure here, expect price to come down, make POC resistance, and then start to this to value. Need to see that push above and the ability to hold and show that where seller value is becomes buy side. You can get continuation up. Until then, this is always going to be first risk off, value high, hold of our POC.
So that means you have to get consensus for the Board of Governors on the policy. You have to get the agreement of the scandal-plagued chair of the FDIC or the five-member board of the FDIC. You have to get agreement by the acting comptroller of the currency.
RTY continue to get down.
Against with the Fed on a matter of
Good
serious
job, though.
policy,
Good.
especially with a chair of the FDIC that is being ousted by his own party as soon as they can get a replacement confirmed. It's an absurd thing.
Market is moving very slow, Powell.
So according to the NATO summit draft communique, China has become a decisive enabler of Russia's war effort in Ukraine, increasing the threat Russia poses to Euro-Atlantic security.
Convey this. So the quantitative impact analysis, is this going to include the interplay with the stress tests, GSIB surcharge, all the other capital charges here? Will that be a part of the quantitative impact analysis?
It'll be this proposal, which does include changes to the GSIB surcharge, but does not include the stress tests.
Okay. But the goal here with the quantitative impact is to actually measure the impact of these rules as enacted, right? Based upon what is existing regulatory structures. Okay.
That's right.
All right, so let's get into the question of balance sheet as quickly as we can. 2.5 years ago, you stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet.
1 minute remaining. I'll lead with EIA crude oil inventories.
Ample reserves. That's 2.5 years ago. Where are we in this question of what are ample reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far. So we've made quite a lot of progress. We think we have a good ways to go. And
Fed's Powell, when asked about the balance sheet runoff, says the Fed has made quite a lot of progress, but there's still a ways to go.
Getting as far as we can without creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually...
15 seconds.
We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand. And we'll find
10 seconds.
that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right, thank you for your testimony. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much. Chairman Powell, are you familiar with Project
Draw
2025?
3.443 million. Draw 3.443 million, lower than the expected build of 1 million. Gasoline inventories draw 2.006 million. Draw 2.006 million, lower than the expected draw of 1 million.
Project 2025?
Distiller inventories build 4
The
spot
reason I'm asking
884
you is
million,
because
build
Also
4
looks like it
spot
needs to come down to
884
ETH
million,
low, to be
highly
honest.
expected build of 0 spot 5 million,
to
and crude
promote
Cushing
only stable
inventories,
prices,
draw
but
0
also
spot
maximum
702 million, draw
employment.
0 spot
This
702
is
million.
your mandate. These are mandates, right? This is what you do. Is that
Yes,
right?
We do serve a dual mandate, that's right.
And so if there was anything that would get rid of the mandate, what would it do to our economy? What would it do to our country?
So the question of which mandate
And we have
serve is
posted
very
the
much a
weekly
question for
EIA
Congress.
inventories
Our
reports on
my
the
own
feed
view
for all those
is that
interested.
The dual mandate has served us well. This is something Congress can change and change back to a single mandate. There are
What do
other
you do to get maximum employment? What do you do?
Well, we have one tool on the economy, and that is we raise and lower interest rates. You'll find, though, that
So,
anyway,
according to
we
a
certainly at the
NATO
Fed
summit
do
draft
believe
communique,
that the dual
NATO
mandate
allies are
is
concerned by developments in
a good
China's
thing.
space capabilities
It's
and
enabled us
activities.
it has not stopped us from controlling inflation when that was the thing that needed to be done.
And so while, of course, I understand you may not have seen, heard, or read Project 2025, are you
And NATO
familiar
allies urged
with
China to
a
engage in
effort
strategic
the
risk
country
reduction
to get rid
discussions.
of diversity and inclusion?
I, I see these things mentioned, but honestly, we're pretty focused on our task, which is maximum employment, price stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware that I created a
He's talking about
subcommittee
Project
on diversity and employment
5,
in this committee?
asking about what the effects would
And
be
do
on
you
the
believe
economy.
that
It went through.
getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum employment?
Spent most of my career in the private sector, and what I observed was really successful institutions in the United States, companies, organizations generally,
Get out of here.
those that do a really good job on
How long does
diversity,
this thing go on?
people, and attract a broad, diverse range of talents to the table, and people feel comfortable speaking. So that's the way we feel about it at the Fed, and that's what we've been doing.
No.
Continue to do.
And do you think it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping diverse talent. That's one of the things that our really good U.S. public companies do well.
Have you seen
Bank
how
of England's
COVID
Pill
in
says,
your
I'm not
tenure
sure if we're in a
on
world of
diversity and
persistent
inclusion
inflation pressures
has
or not.
created opportunities for more jobs? and
Yeah, but if you put
reduced
people in
the
every
unemployment
section,
rate?
then
Certainly seen, I think you see over the course of my long career a big change in diversity and inclusion. And you see that in the private sector and the public sector, and I think that's generally progress. I do.
Under the work of this committee, and the subcommittee is chaired by Ms. Beatty, she was able to gather important data about what was going on in the private sector. And what she discovered was that many of the CEOs and others welcomed the opportunity to learn more and to do better and to get assistance. And we saw improvement with diversity and inclusion. Have you seen that?
There's no question. If you talk to CEOs, they get this. If you want to attract the best,
watching for this rejection of our value low on RTY, and then for one more leg down, or a recovery of value low, and then a push up to
I would
POC.
like to compliment you on the job that you've been doing.
Watching
I'd like to
something like
congratulate
this,
you
just push
on
back
keeping
up,
us informed
or a
about
rejection
inflation.
and continuation down.
Not only do I welcome you here today, I look forward to working
I
with
still
you
don't see
years to
anything
come.
that's all that actionable other than if you were playing off of the value edge high test on
The
ES,
gentleman from Arkansas, the vice chair of the full committee, Mr.
or
Brown.
the value high edge test on ES,
Thank you,
or
Chair.
on NQ
Chair
at
Powell, thanks
72s.
so much, and welcome back.
Everything
to the
else
committee. I want to pick up
looks
where
pretty bad.
Senator Scott and Chair McHenry left off and reiterate.
I would say that NQ probably has one more leg down to 4150 if we don't see a strong bounce here in a couple seconds.
Supreme Court's precedent, I think, makes clear that if a rule undergoes broad and material changes, from the proposal to final rule, the public must be giving a meaningful.
We need to see buy side pretty active, slow, and stay open if we want to continue to hold this
Yes.
Looking forward to seeing the
VWAP off the
results of
15,
quantitative impact study
Bank of
at
England's
which is
report
a
says
really
it's
important
to
level
see
for overall
reduced tightness
trend.
in the labour
This
market
purple
leads
line
to
here
slower wage growth.
is going to continue to act as a supportive level for a push up, right? Or are we going to see a potential shift here start to occur where we build below with this active seller above us? As soon as the JPOW thing started, the seller stepped in after some absorption at the highs and then pushed us down pretty aggressively in this candle. We're now holding that as a resistance. So if we see this shift with these sellers here who were able to be kind of absorbed at the lows from buy side, and we are now below them, right? We're now watching to see if acceleration takes place here and if this is now holding as our resistance. If that happens, we expect more downside. So just keeping an eye on that. Just tested value low here on NQ. The market is still pretty unactionable, in my opinion, for any sort of like scalping. It is trending in a direction, but the action is pretty slow. It's right now not a huge slow market.
Literally of an unprecedented, uncontrolled growth in the administrative state. And so I think all of us on at least this side of the aisle are certainly saying to the Federal Reserve and other federal agencies in our jurisdiction that we want to reassert Article 1 authority over the direction that independent agencies work. Would it be fair to ask you to certify that because of this change in Chevron that the Fed would commit to promulgating new rules only if they're at the direction of an explicit congressional authorization?
So I think, first of all, we're studying that and several other decisions that have just come down in the last week or two. So I haven't got anything definitive for you on that. I think you know us to be an organization. I know us to be an organization that is strongly committed to the rule of law. Supreme Court says what the law is. We'll always do.
So far, rejecting perfectly off our value low on RTY. We're watching to see if we get this new low or if we are able to hold the double bottom at 49.5. Again, if this continues to hold, I fully expect us to rotate down to EH low if we fail at value. I know that's a lot of lows, but basically as long as we're maintaining this 52.5, I fully expect us to have to come down to EH low 6. That's what I'm saying.
I think many of us certainly agree with that, and we know that
NQ bottom of value. Again, either we continue to be able to find buyers here and we absorb sell side and we hold value low, or we expect this to lead to a larger expansion down off of a failure to make value low supportive, and then a continuation down from sell side with the amount of pressure that was here. Right, so like either this is able to hold, or we're going to be watching for a reaction that looks like this, where we reoffer and then we push back down to previous day value high. This is where we look for supporting buyers. So as long as this is holding value low, everything's fine, but we do need to see a push and the ability to build above. Something like this would be ideal for buy side, where we recover at 30-second opening range low. This becomes supportive. We then make our ETH high supportive, and then we can get continuation after that. Again, all we're looking for is for this to continue to be buy side. This will become resistance, and then we look for a push down to say value high before we look for long opportunities. Either we remain in today's balance or we return to yesterday's balance. Any questions about that, guys, or are we all on the same page?
It's not like everything went off the rails. It's like we had this pandemic and it really changed the way the economy is working. We had a big crisis. We did a lot of things. So the concerns that led us to those concerns that we were in a world of very low interest rates all the time.
And it's the same thing on ES, right? We need to make sure that buy side is continuing to show their hand here, right, in this region. As long as that's happening, we're still within our auction on the day. For longs, we want to see this secondary move above value high, and then that can push below this, and then this becoming resistance is going to lead
Fed's power says we see current Fed
down.
policy as restrictive.
So I think that's the question we'll be asking ourselves in our review, which begins at the end of this year.
We look forward to that.
How much of what we did in that time period is relevant to the new world where rates appear to be higher?
The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Thank you, Chairman.
Fed's pal
and
says the
welcome,
neutral
Chair
interest rate
Powell.
must have moved
It's
up, at
great
least in the
seeing
short
you.
term.
Last time I saw you, we had the gracious pleasure of you visiting with me in my office, and we discussed a great variety of things. Thank you for that visit. Now, Chair Powell, this year the Fed tested 31 banks, up from 23 last year. Is that correct?
I believe that's right, yes.
And by estimating losses, revenues, expenses, and capital level under hypothetical stress scenarios, we did that, correct?
Yes.
And all 31 banks remained above their minimum common equity tier 1 capital requirements after observing losses of nearly $685 billion. Is that correct?
Yes, that is correct.
Yeah, I wanted to get those figures out and provide you with, you may have heard this, but I want to share it with the nation because your vice chair, Barr, made this statement, and I wanted to put this in the record, his exact quote from this great achievement. He said, "Our goal of our stress test is to help ensure that we have enough capital to absorb losses in a highly stressful scenario. And this test shows that we do." I thought that was a great statement of your record. Now, let me ask you my question, and it's simple. Will the 2024 Fed
So bad on the
stress
spreadsheets.
test results have an impact on how prudential regulators roll out a new and updated capital proposal?
So the two are really two different things.
So again, pivots here, still just rotating within our value. Rejected POC. This is the middle of our range. We need to see that go supportive if we want to see higher. I'm just going to mark that in orange. It's clear.
For further comment, a revised
Value low is down here. So if we want any sort of continuation, we want to see value persist, or this will become resistance, and then we'll secondary leg down. I'm just going to shift this over. I kind of want to delete this, but I don't want people who are showing up late to not have an idea of what's going on. Keep it on for as long as I stand it, but it is a bit messy for me. Just watch the reoffer here at 43s. If 43s hold offer, then we expect one more leg down again to stay value down at 37. Some two-sided trading here. Need to see acceleration from sell side. We have a minute and 20 seconds left until it's open.
And at the same time, high home foreclosures. And we were successful. And we've established that program, and it's still going on and helping many of our states. But, you know, I want to also share what is happening around the world as a result of our activities. The European Union is now set to delay key parts of its bank capital rules by more than a year so that their lenders will not be.
It's so hard to follow these guys who try to talk.
It's important to know that their banking regulators have also delayed for another year, imposing high capital rules on countries' banks.
It doesn't help that they use run-on sentences, so I said at the beginning.
The Swiss National Bank.
By the time they get to the end.
It's highly unlikely now to adopt a proposed 15% capital requirement for UPS and other Swiss banks. And the Bank of England has issued a near final proposal to increase UK bank capital by 3-2%.
New 15's opening now.
I think this is
Still holding value on NQ,
your great
but rejecting PLC.
that of your vice chair.
I'm just going to turn off drawings real quick just so we can have a clear indication. Again, this is value low. This is POC.
Sure. So
This is value low. This is POC. But we're just rotating ticks with POC now as resistance. Holding value low, but no real idea yet, other than the overall trend that we're in, that sellers are still seeing buy-side absorption here at the lows, but no confirmation from buyers that we push higher. Just no.
We'll recognize the
There is
chairman,
someone
Mr.
attempting.
Muser for 5 minutes.
Thank you very much, Mr. Chairman.
Still need to see a break of our channel down.
Continue to indicate that you will look at the entirety of the economy, the whole economy. Appreciate that. So one of the nation's largest banks recently warned in a memo, and it's also been voiced by smaller banks, that the current pace of regulations, such as changes to capital requirements and lowering debit card interchange caps, could lead to a new fees associated with checking accounts and other increased costs for small businesses. This does come amid expiring tax provisions that are sunsetting as we speak, that are critical for small business, such as the R&D tax credit, interest deductibility, and bonus depreciation. This does raise the question, are you considering how these regulations and tax increases will directly work against your mandate to achieve 2% inflation? Moreover, with the proposed changes to Basel III, it is crucial to ensure that all stakeholders have a voice in this process, which you are stating will occur. And a Basel re-proposal and adequate comment period are certainly very welcome. So, Chairman Powell, yesterday in the Senate, you mentioned that the majority view of the board is to re-propose Basel III for comment period. Could you clarify if this means the proposal will be re-proposed from scratch, and any other specifics you can provide?
Sure. So we haven't reached agreement on this. As I mentioned, we're working through this with our colleagues at the FDIC and the OCC. And I can't tell you exactly what the form of it would be. The sense of it would be, though, that we're making material changes, and that we would want the public to have a chance to look at those changes in the light of the way they play off against the quantitative impact survey, and should have a reasonable time to comment on those. In addition, we're focused on one big area, but there are institutions that have made comments all across the spectrum, and we're reading all of those carefully. And we're not going to republish all of those. Some of those we can just make changes and move forward on. So it's going to be a very labor-intensive, time-consuming.
It's such a slow day until these guys shut up.
Takes a long time, and we're going to get it right.
Good, that's great. Obviously, Canada recently postponed, as did the EU and UK, for international competition standpoint. It seems to make sense, and so that's appreciated. Chairman, would you agree that excessive spending, increased taxes, limits on domestic energy production, in principle, are a cause for higher costs for business, contributes to inflation, and as well tightens the labor markets, kind of running contrary to your two mandates?
You're asking me a kind of a political question there. I don't want to criticize a platform of economic fiscal policies that are not really ours to decide.
It's more of an economic question, but I appreciate your answer, sir. So when you mentioned recalibrate policy yesterday in the Senate hearing,
It was selling off in morning. Price move.
Economic conditions?
Yes.
Talking about ES or
Yeah.
Chairman, is there any
over
data
that? Oh, wait.
to support the so-called greedflation? This term greedflation somehow has caused inflation. Is there any data to support those comments?
So we look at it that this inflation has been caused by a combination of, very.
So first of all,
and
we started on a gap up, right? So tick is going to start at an extreme because we gapped up on price, and there's no reference point before our gap up. So all of our names are on a uptick at the start of the day because we gapped up. Remember, tick is a measurement of the up and down ticks of individual names, and then it's the cumulative, right, of all of those names, and it gets marked candle. So 1,000 stocks on an uptick, we're up here. If we have 1,000 stocks that are on a negative downtick, right, we're down here. But we have some profit taking off of the gap up. So we actually don't have any divergence here in the beginning of today. We gapped up, right? So also at a gap up. And then we start to see a sell-off, which is also followed by tick coming back down to the mean, right, at our zero, a neutral state. Off of that, we then do have a bit of slight divergence here, which is interesting. What you need to understand, though, is that we started on a high, and now we are oscillating in a positive but neutral state in the market with price moving. So this is actually not bad, right? Because we are holding our zero level, which is key to let us know that we're still in a bullish state. If we're just oscillating between 0 and 500, that is bullish, but not incredibly bullish, right? It's just trend. It's just an oscillation of this movement where we have either most of our names at a neutral state or uptrend, right, and an uptick. Until we see a shift away from this, we know that the market is still moving at a pretty new bullish state, even now, right? All we've done is come back down to our open price, right? Until we start to see this shift and go into this negative 1000 and then start to oscillate below zero and hold like this, then we have a bearish trend that's happening, right? Where most of our names are then in a bearish state, where they're oscillating between a neutral to negative state in the market. Patel is in. You watch this on YouTube. So just keep that in mind that when you're looking at it as a state of kind of like the overall market's trend. And are we bullish? Are we bearish? Are we neutral? We start to hold zero like this. This is a very neutral state on the market, which is not a great look to try to take anything actionable. And a lot of the times you'll hear me say almost nothing or give out a single trade when we start to rotate ticks around zero without any sort of extremes. This isn't a very actionable area. It's an area where you're going to end up getting stopped out quite a bit unless you can find an extreme where the market's coming into either sell side exhaustion, right down here, these extreme areas, or an area of buy side exhaustion up into these areas. When we're at a neutral state, you're basically just doing a coin flip and hoping that the overall trend continues to hold. Right, and we know that the overall trend from the highs is this just channel down, right? Like that's all we have is prices just slow grinding down, back down to our open. But it's not incredibly actionable trying to enter now, especially with us just kind of rotating the zero tick. I highly recommend that you go back and watch the 15-minute video on tick divergence and just overall understanding of like what tick is. I go over how many stocks are in the nicey tick and what it means. But yeah, so this is just a very neutral tick structure, slightly bullish beginning of today. But always keep in mind that if we gap up on price from the day before, expect tick to be also at an extreme, starting the day at an extreme high.
One of the things that I'm concerned about, reading this from this document, that the document argues that the Federal Reserve is the inflation problem. And eliminating the Federal Reserve, imposing economic policy on the Fed that does not come from within the Fed. I'm wondering.
No, I think it's still very useful. This is just a very neutral day.
With any of that, I just stated whether
saying tick doesn't work anymore. It's like saying that itself. It's literally just showing you what it's doing. If tick isn't moving, then you should probably not be trading.
What we've learned and what we know is that having an independent central bank is really essential.
If we don't have enough stocks to make an extreme on an uptick or a downtick, like why are you trying to take direct bets? Sounds like you're the one that needs to
So I frankly think that view is very widely held. I find up here on Capitol Hill in both political parties. So
eliminating the Federal Reserve is
We don't have names to move the market. Stop trying to take a directional bet.
economic stability.
Yes.
Thank you. I knew that our chair, that the ranking member was going to come in and deal with the issue of housing. She always does, and we all appreciate the fact that she's obsessed with it, and I like that obsession. But I'm wondering, as we try to figure out how to deal with this.
Oh, no need to apologize, though. It's just one of those things that can be
Is that a question?
hard to understand at first. So I totally get it. That's why I wanted to go over it with you while you were here.
Where I was going, please.
We have finally made it to our target here on NQ, previous day value high. We are watching to see if buy side is willing to defend this 37.25, and if we can get back over.
Based on some comments you made yesterday,
We are of,
appears you've made quite a bit
again, we need to see buy side interaction here and the ability to hold and builds and get us back over 4150. We want to rotate
President
up.
Macron calls for parties to
If
hold
we start to
build a
hold
majority.
previous day value high as resistance, right? So say we do this instead of bouncing, which I hope we bounce here, right? We really want buy side interaction here. If this becomes resistance though, then we should be looking for rotations, right? Back down to previous day POC, because we are now within yesterday's balance. If previous day value high becomes resistance, we watch for reoffers of this level, and then we look for a rotation through yesterday's balance. Because what is this showing us? It's telling us that we are no longer finding value above, and that we are rotating back through our previous areas of value. So if this becomes resistance, this is that same seller as before who are like, oh, okay, this is now our new auction, right? Our old auction is now our new auction. Sell side wants to hold this as resistance. We then have to rotate back down to where buyers were in our old auction. This is where value is found last. So if sell side reclaims this, then we rotate into the back of the old structure. If we hold this, then we are confirming that buyers are where sellers were previously, which is great because that means that we still want to continue. So this level is very important to us to let us know structurally where we are headed. And I delete this now that it's played, and we get to see what we're going to do.
someone's got to be holding it up.
Well,
Yeah, and that makes sense, right? To have that solid bid there, because it's previous day value, right? So as long as we are maintaining that value that value level as supportive, we should expect buy side to be there. It makes sense. It's by far the best area of value if we were going to hold yesterday's structure.
One person, but I think it's, I mean, the FDIC can speak for themselves, but I do think they're bored.
Think about it like this. Like, think about if you...
Timeline question before I move on. You mentioned
It's...
yesterday that reasonable prediction.
I think the best way to view it is, like, think about a really aggressive... You're in a line yesterday and the price went up. That's about it. You're getting the best price
Again, I can't be that specific. And,
that you can possibly get if you were bullish and you thought that we were going to hold, right? That's the best way to look at it. Is we have broken outside of the range in which we were trading yesterday, and if you think we're going to maintain that range, then this is by far the best area of value for you, because it's where we this was our value high on the day before. So like if sell side is now offsides, we expect buyers to now try to defend that level. And so it's the lowest potential spot you would think price would go, and you should be trying to actively bid off of it until we show that we don't have an interest above it. If we push below it, right, then we have a very clear understanding, like, oh, okay, like we're back into that same off. But like as long as we're above, we need to try to look for buy side to be defend. If there isn't any action there, right, and like that was the only thing that we get, it's like, okay, this is becoming a little less interesting. There's a little less confidence in the level. But like it should always, like, first attempt, I think it's almost always worth trying. And like, where did we reject? Well, we rejected value low, right? So we're stuck between a rock and a hard place right now, between this value on the day and yesterday's value. So we need to reclaim that 4150 for continuation up, or we need to push below value at that 27 for continuation down.
studies are very important because they're
215's just opened, as well as our secondary
I think it's,
PVC
very important
zones.
to have that because we had a mucked up process with Basel 2.0, and I don't think we don't want to repeat that. And I have a little time left. I'm going to yield back.
Russell back up to our pivot here as well.
Because I know we had another question.
I think
Trying to recover and reclaim value. So far above, but that's just because we've shifted below with this price action at the lows. What we need to see again is like this bid, the ability to hold this node edge high, that rotation up.
Something that's being considered that would actually drive investment and give a clearer picture for investment and perhaps help in these two categories and in the end increase in supply so as we lower those prices.
Honestly, when we think about our near-term rate moves, we're thinking about a couple things. And
Need to change this to a deep setting. This is so obnoxious.
My apologies, Chairman, I went over.
Sorry.
Chairman, I yield back. I yield back to my colleague.
The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. Thank you again for this hearing, and the ranking member, thank you very much. Chairman Powell, thank you very much for being here. We appreciate it. In fact, I was looking at your history when they were saying who nominated you when you got here and all that. In fact, you had public service even prior to that time, right?
Fed's Powell says the Fed wants to be more confident about inflation.
I think you've been outstanding. I think we all respect you deeply here. You're pretty boring here today, to be frank.
Sorry?
You're pretty boring here, to be frank.
Thank you. That's a high compliment.
Yes, it is, because sometimes when you're here, there's all sorts of cameras here, and they're watching your every step and all. And I think there's a reason for that, right? And that's because the economy's doing all right. Am I wrong about that?
You know, take a look at our economy. We're growing at around 2%, it feels like. Inflation is down to 2.6%. Unemployment's at 4.1. These are good numbers.
Yeah, I mean, I hear the parade of horribles on the other side, how the sky's falling, but
Fed's Powell says the economy is growing about 2%, it feels like, and with inflation and jobs, these are good numbers.
Did you read some of the headlines of the new government in Britain? Some of the headlines? If not, let me read one. It says, "New British government inherits worst economic plight since World War II." And in fact, there's a number of headlines like that saying that England's in trouble. I imagine if you were running their central bank, I bet you there'd be a whole bunch of media here beating you up to find out, what the hell you're doing or what you aren't doing. And I think the reason for that, again, is I think the government here has done a pretty darn good job. One of the things you said you didn't see coming was the pandemic, right? I'm not putting words in your mouth.
Right.
In fact, I was here and I heard the parade of horribles that we were going to have a recession, maybe a depression. In fact, the country was going to fall apart. Did it?
We saw some buyer side interaction here at the 705, 700 yesterday. We don't see a buyer try to show their hand at the 705, 700 where we are right now, this little 5-point range. I believe that we go to ETH low.
Over time, there were times when their inflation was higher. I think overall it was broadly comparable.
Yeah, in fact, I brought it up a number of
Immediate bid off that 705.
It had much higher inflation than we did.
Well, Europe was much harder hit with the energy issues coming out of the Ukraine war than we were.
Sure. I mean, there's a whole bunch of other...
Yeah, there's a lot of trapping here. I'm looking and seeing from yesterday.
But, I mean, it is interesting today that, the parade of horribles that we hear doesn't seem to manifest itself with the media or the attention that you normally get. And that's good.
Retesting previous day value high here.
I want to ask a couple questions. I do have concerns, Basel III on housing.
Sorry, I just was scrolling left and saw that. I did not trade yesterday, so...
I won't rehash them. But I
just
do
watching and
issues
it's a little of a quick...
Obviously, you said you don't read too much of the news. You didn't...
Very quick interaction as I was speaking.
That's what you meant to say, and I don't want to put words in your mouth.
It's good.
When
this is a learn tool. Other than that, though,
heard about it.
I bet.
I think you said no. I think you've probably heard about it, but you haven't read it.
I've seen nothing more than headlines on it. I mean, I've devoted zero.
Yeah, me too. I don't read
energy
that.
into.
Yeah, I don't read that wacky stuff myself either, but I certainly read the headlines. But the reason I ask about the headlines is that you obviously have seen what has happened in Texas. You've seen what has happened.
I don't think there's any change in this until we can get back over a previous day value. I think the same thesis is true.
Yeah. And so what are we doing? You've taken a number look at the risks.
We need to see a recovery of previous day value and then push into our value low edge on the day.
Well, I saw it coming. I've been saying it for a long time, but a lot of people did.
Right, this is the range. If we can here, we push back up. Just know that's all that there is.
In climate, and that is just to look at the institutions that we
if we reject here again, then we just expect another rotation down. What we're looking for is for this to become resistance for that move.
Right.
Slow. If we're going to get continuation, but so far buy side's still very present at that 700. We just know that a seller is still overall in control here. Russell's still battling with our pivot above.
So we don't regulate insurance companies.
No, right, but you regulate the banks.
Banks, yeah.
And these banks have mortgages on those houses, do they not? Many of them.
Well, in many cases, they're not writing mortgages anymore. So that's the result we're getting, is that banks are saying, they see these risks. They do.
My time's up, but thank you again. Appreciate you.
Thank you.
The gentlelady from California, Mrs. Kim, is recognized for 5 minutes.
Thank you, Chairman. Chairman Powell, thank you for being with us today. Gosh, you're under a lot of pressure from all sides to divert from our monetary policy goals. And I commend you for your leadership and staying focused on the core missions of the Fed, which are price.
I think if we're going to continue higher, we want to see this 15 hold and then push back over value. Again, not a ton here. We're just looking for a higher low and buyers to step in squeeze. Not fully expect candle to be
moving forward.
Russell able to get back into value. It's a big deal, right? Us holding, and now trying to go for that secondary leg that we have drawn out. If we can do that, we should be able to trade back up
That garners mostly
this
negative public
PC.
comments in a public comment period.
55, 56.
Modified proposal.
Sorry, I didn't follow your question.
Would broad support mean abandonment of any modified proposal that garners mostly negative public comments in a public comment period for the modified proposal?
Broad support empirically would mean,
I'm gonna delete old drawings now that
solid vote
played.
on the Fed board. And I've tried not to be specific about what that means, but it also means broad support among the
15 held.
community of
Good so far.
on all sides. That's what I meant by broad support. Yeah, that's what I
Need to see this push over previous day value high and bid for that move. 40s.
To the proposal. I would also urge you not to overlook how the Basel Endgame proposal.
Yes, at POC here.
Impact FBOs. And
Russell coming into target now.
U.S. domestic jobs because of the way the outside operational risk is, weighted. So can we get your commitment to that?
So let me just say I'm not going to get into specifics. We're well aware of those concerns. We've obviously carefully digested all of the comments we've gotten from all different sectors, and those are concerns that we're well aware of.
Thank you. Let's switch gear to another matter. You have spoken for the need of transparency. Are there any conversations at the Fed?
Really watching to see how our reaction here is in POC before the shift, right? This 56 level. It's 56 to value high in our day open. Incredibly important to let us know if we're going to get continuation up. We're getting this movement because the Russells have been able to gain some momentum. If Russell loses this momentum, what happens to the rest of the market? Right?
Read those, and we're going to think about that. We're open to improving it. We know that the stress test has to evolve over time. If it's
I'm going to delete this now that this is played. Or at
subjects where we're
this interaction.
prepared to listen and think about ideas.
Definitely. I would like to see more stress test regime that is more transparent and adapted, identifying unforeseen risks. So we can achieve that by being more collaborative, I believe, yes. So I'm also interested to hear from you whether you and your fellow banking regulators have considered the cumulative impact of any new liquidity standards with the Basel III framework and the existing post-crisis liquidity requirements. So what industry engagement has the board staff held with respect to changes to the liquidity framework?
So we haven't actually made any proposals on that yet. We have had significant industry interaction on the proposals, and I mean we will move, I think, at some time this year.
What about
forward.
the board staff? Have they conducted any industry-wide data collection to study the necessity for and the impact of any changes to the existing liquidity framework?
I think we've done a lot of investigation on that front, but I think that this is the beginning of the process, not the end. We haven't published proposals yet. We're working on them, and it's a pretty early stage.
Thank you. Let me quickly talk about the inflation issue. We had a peak inflation rate of 9.1% in June 2022, and a lot has been talked about being a supply side issue and the demand shock from the opening economy. So can you elaborate how the expansion in the money supply and fiscal stimulus played a role in persistent inflation, and why is it so important to get to the 2% inflation rate goal right now?
So the inflation that arose here was a collision between very strong demand as the economy reopened. Remember that there had been fiscal transfers. We had rates very low. Those things were done because we thought we could be looking at a very, very bad economic time. As it turns out, the economy reopened and demand spiked very high. People had saved a lot of money because they couldn't spend. And so there was tremendous demand and there was constrained supply. And what you got was inflation. And you got that everywhere in the world. That's what happened. So what's happened to bring inflation down, we've made quite a lot of progress on inflation. To bring inflation down,
I'm gonna clean this up while we're being patient and waiting to see if we can hold a previous day value high here on the recovery.
the supply side has been healing.
I'm gonna keep the highlighted levels because I think they're helpful for you guys. But other than that, I'm just gonna
Fed's pulse as
try
the
to
Fed has made quite a lot
as I
of
can.
progress on inflation.
I'm gonna keep this one as well because I think this is our bullish pivot. Other than that, then we're just trading in balance. Well,
thank you, Chairman McHenry, and thank you, Chair Powell, for joining us today. As the
it's good
President
to
of
me.
the Federal Reserve Bank of Atlanta, Raphael Bostic,
You know that if we're between these areas, we're just in our balance. This is the top of our balance. Need to make it supportive above for inflation. 46.75. Yes. It's trading POC now. Russell coming back down to our pivot. Important that we see buy side interactions here at edge. HVE. Right. This is just POC shift to POC shift. Previous POC before we shifted down and built this out, and now we are back to this area. This is current POC.
For the work that you're doing to make sure that the economy works as well for the hardworking people of Georgia's fighting Fifth.
Do we balance between these two zones, or does this become our resistance and then through this distribution, this tail end resistance? As right now, I would really like to see buy side interaction here. This previous seller, now buyer.
That is why I was concerned when I started receiving outreach about the
NQ coming up into our pivot at 40s from the hold of previous day value. Again, this is all that's here right now. These two levels. Get your hold and then your push up. For anything more, we need to see a recovery, the ability to bid daily value low, and then rotate from this back up to our POC 66. That's the next rotation here that we're watching for. Need to see the ability and an exciting bid above this level, or expect that this seller is still here to the left. Right? This is our offer.
Unbanked and underbanked individuals and marginalized communities continue to flourish. In response to these concerns, my colleague across the aisle, Mr. Lukemeyer, and I sent a bipartisan comment letter in March to you highlighting those very concerns and urging that the final rule not negatively impact low and moderate income communities.
New 15s in 30 seconds.
Take into account how regulations impact constituents
Retesting previous day value high here, and
submit a comment on their behalf.
Russell attempted to hold our pivot and not enough buy side interaction to keep going. Looks like we're probably going to have to come back down to this value low edge, right? Rotate this distribution that we just talked about before we get a test.
In terms of people where we don't have comment letters, we try to be thoughtful about the impact of our regulations, but principally we're looking for public comment on things.
Thank you. The FDIC's most recent data shows that the rate of unbanked households is at an all-time low. The bank-owned initiative has certainly played an important role in this progress.
What we're watching for buy side again is just the ability to start building out this area. Right? Now that there's a seller here, in this area and this area, it's very clear with these POC shifts and with these sell side deltas. We see that there's a buyer attempting here. We're looking for buyers to be able to defend this POC. We see sell side is off sides down here below, right? We are looking for what? The right side of the V, right? The overall scheme. See bids step in, push off of this, and higher. You don't want to lose this edge.
Access to the financial system for marginalized communities, so we wouldn't want to do anything.
If that doesn't happen, right, nothing's changed, and we are just going to have to develop out this bottom structure, rotate these 2 points.
On those issues,
but it's fine as long as again, like I really like us holding here, previous state value high, totally fine. Makes sense to me. It starts to become resistance, then we run into issues. They're just battling inside this 15-minute, previous 15-minute.
Impact and what it means to consumers when they're accessing financial institutions. I look forward to working with you to further the Fed's financial inclusion efforts. Like earlier this week, I sent you another bipartisan letter related to the Federal Reserve's April proposal to extend the operating hours of FedWire Fund Service to 22 hours per day, 7 days per week, and every day of the year. That was news that I was eager to hear. This may sound like a small technical change, but it can have a big impact on our constituents, especially for those living in marginalized communities who live paycheck to paycheck. Growing up in the booming metropolis of Smith Station, Alabama, probably never heard of a Chair Powell. But there are limited options for loans and short-term loans. In an area where everyone needs a car to get to work and they have to work to eat, when money is short, any delay in accessing a paycheck or paying a bill can disrupt your entire household. Extending operating hours for FedWire Fund Service and National Settlement Service will allow people continual access to their funds outside of what we've deemed normal operating hours. And I hear the gavel. I'm out of time, but we will be following up for more conversation. Thank you.
What a boring day.
Flood's recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, after a year with very high inflation that battered American paychecks, inflation rates have moderated some. However, inflation continues to linger above the 2% target rate set by the Federal
I
Reserve.
was yesterday, by the way.
In fact, the PCE inflation index has remained
Bad trading, good trading.
For the last 3 years. The Federal Open Market Committee statement on longer-run goals and monetary policy strategy issued at the beginning of the year stated, and I quote, "The committee seeks to achieve inflation that averages 2% over time and therefore judges that following periods when inflation has been running persistently below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time."
Oh yeah, nice.
Chairman Powell, does the commitment to achieve a 2% average over time apply in the other direction as well? Meaning that if inflation remains above 2% for a
Oh yeah, that zero hold is also really solid, Kolsky, with that move up. Then just a rotation of distribution.
In order to achieve
nice.
An inflation average of 2%.
No, it doesn't.
Is it fair to say that you would need to see the PCE index dip below 2% at least once in the coming months in order to contemplate a rate cut?
No, that's not fair to say.
Maybe they login is down. Wow.
You don't want to wait until...
Did they go over what happened? Was it just Trade Evade, or was it like all of the...
You wouldn't wait that long. If you waited that long, you probably
they're like
long because inflation will be moving downward and will go...
data providers as well. And brokerages like the Quant Power, all those.
Need to see in order to support a rate cut this month or in September.
So Powell says you don't want to wait until inflation gets all the way to 2% to ease policy.
Wow, so both Sim and Live was down.
I will answer your question. What we said is that we want to be more confident. We want to have greater confidence, and that means more good inflation readings. That inflation is moving sustainably down to 2%. Greater confidence that that is the case. But remember, we have a dual mandate, too. We're not just an inflation targeting central bank. We also have an employment mandate. So I could also...
Powell says we want to have greater confidence, which means more good inflation readings.
In the labor market. And we do now see, I'll say, speak for myself, I now see the risks to the two mandates as much closer to being in balance. I think for a long time we've had to focus.
NQ still looks fine. Held previous POC, previous candle, right? Need to get it over this 40 level and make it supportive if we want anything more though.
Labor market is getting pretty much in balance.
Still rotating between previous day value and current
AM
value
Eastern
low.
Time, we expect comments from Bank of England's man who speaks as a panelist at the Vital Topic Lectures Alliance Manchester Business School on the transformation power of productivity. How high is the hurdle for UK business investment?
In July and September. Can you use this opportunity to speak regarding the Federal Reserve's political independence going into this election?
Sure, I'd be glad to. So, our political independence is critical to our ability to do our jobs and to sustain the faith of people across the political spectrum. And it comes down to we make our decisions based on economic data, the evolving outlook, the balance of risks, and we don't take into consideration any other factors, including political factors. We have a long history of doing that, and I think the public believes we will do that. Any decision that we make to, on rates, on any of our policy tools, it's going to be very well grounded in the data, and it will represent our best thinking about what is best for the American public in the near and medium.
I think if we can make
that's the promise that I will give and that all my colleagues will
this
give. And that means that we're not looking at things like election cycles. We're not looking
40
at
supportive,
any of those things.
there's a good chance that the low is.
Tell us is the right thing to do when we figure that out. When we
If we continue to hold here, it's still pretty neutral.
Appreciate that.
But I think a recovery of that at least gets us back through and testing our value.
Housing often makes up
value
the
high.
largest, if not the largest, expense for many consumers. Inflation for housing remains persistently high.
We just want to see consistent buying here at this previous day value.
Consumer sentiment is remarkably
We
low.
want to see a pushback in, and then we can start to rotate back through value. Again, I think it's a little early. We need to see this break and this downside, this offer here at 40s to go away. But if we do, I think that there's a good chance that we have enough stuck participants on the wrong side of the trade that we can start to rotate back up a bit aggressively. See some more active buying start to happen.
we say that the economy's growing.
We can see the same thing on the 15 footprint, right?
Prices are
We
high.
have sellers who tried to market sell down and were immediately absorbed, now pushed off. We have the beginning of a shift in our trend here with us being able to build above the POC from the candle, right? We're looking for the next candle to have the same interactions where we're able to build and hold this POC as supportive from this 15-minute candle as it finishes, right? We have another 7 minutes on it, but we're trying, right? We're in the trying stage right now. We're trying to see if buy side has the willingness to break this downtrend that we're in. And this is our first real good signs that this has potential with us holding POC and with these wick lows with sell side deltas offside. And still need to get back into today's balance, but there's an attempt. If this attempt fails, right, of course we're just gonna get down. These are the things that I start to look for that get me excited that this might be the end.
And the question we're asking ourselves is, are we sufficiently confident that inflation...
And again, ES is at value high, right? So NQ is really the only thing that's diverging here and really slow, lagging compared to the rest of the market. So ES and the Russell
says I don't have a particular
are inside value, right? And ES is already trying to push higher.
I mean, are you confident that the inflation rate...
For ES, would you want to see it come back to 44s for retest entry? 44s would be nice, but you also just have to be willing to participate at our value high as long as we're holding here, right? This is fine. But if this doesn't hold, we expect rotations back down to POC, right? But you have to be if buy side wants to shift value, we have to go with the shift value.
Capitalized in the absence of Basel III?
I've long been
If we want to break balance here,
banks are well capitalized.
we watch to see if they're willing.
Banking system is about right.
And we should see NQ follow through, right? Just because we've now seen value being reclaimed on Russell, right? Which is this move here.
First of all, there's
and rotation up. We've now seen value reclaimed on ES. This is that rotation up. We're now just getting this value rotation on Q, which have
Mr. Powell
room
says,
to
I have some
POC.
confidence in inflation coming down, but
Just
not
need to get through
prepared
this
to
40
say I'm
seller.
sufficiently
And
confident
then we
in it
have the
coming
same kind
sustainably
of
down
movement
to
that we saw in
2%
the
yet.
ES and RTY.
That's what our banks want, that's what we want, and that will be.
At 11:30 a.m. Eastern Time, we expect comments from Bank of England's Mann, who speaks as a panelist at the Vital Topic Lectures Alliance Manchester Business School on the transformation power of productivity. How high is the hurdle for UK business investment?
Should be, at the end, should be consistent with the requirements of Basel and consistent with what the other large jurisdictions are doing.
Are you confident that there's no legal conflict between the standardization recommended by Basel III and the regulatory tailoring mandated by Congress?
I think we can work through all that, yeah.
Okay. But if there were a conflict...
Basel doesn't impose any requirements on anyone. There's no enforceable requirements. Every jurisdiction does what it's going to do. Basel doesn't bind anybody.
Right, but the regulatory framework you're adopting would codify those recommendations.
Yes.
Again, really want to see the ability to bid above this for that rotation back up to see up 256. 40s can hold as supportive, then we know that we can rotate back up to.
Does the loss of Chevron deference have any implications for Basel III?
You know, it's very early days to assess. There's several decisions that are about administrative law, and I think it's too early for us to say. I mean, ultimately, the question is, are the actions we're taking in compliance with the law? And that decision says that there will be a less deference, or no deference maybe, to the opinions of the agency, but that just means a court will be answering the same question, which is, are those actions consistent with the law?
The Fed has a target rate when it comes to inflation. Does the Fed have a target when it comes to quantitative tightening, like when it comes to what should be the size of the Fed's balance sheet?
Well, we don't have a specific target, no.
What would you consider to be a healthy size for the Fed's balance sheet?
We define it, not with numbers, but with words. And we want an ample reserves regime with a buffer, so that reserves are not scarce. And we think plentiful reserves, ample reserves is the right place to be. And we'll find that empirically.
Can you put a number on that?
No, I can't really.
For 4 decades, we've had the best of both worlds, low unemployment and low inflation. Can the U.S. economy return to the golden age of low unemployment and low inflation, or are we doomed to live with a new normal of higher interest rates?
So WTI crude rises by more than $1 a barrel to $82.42 a barrel.
Low unemployment.
We have high inflation, so can we have the best of both worlds?
We certainly can, and that's the plan. Okay. We're going to return to 2% inflation, I'm reasonably confident. Some people argue that we're entering into a world of a lot of upward inflation shocks. That would be a challenging world, but
2 minutes left until this 15-minute candle's over. Are we starting to be able to recognize this shift on footprint? Have I been doing an okay job kind of showing that beforehand, that shift of trend? Is it becoming more recognizable?
I chalk some of that up to the fact that you've got some very good folks from Iowa on your staff there helping keep the trains running on time, so that's excellent. I will note that, in Iowa, the average family has experienced, annual inflation of about $925 per month just in the last 3 years. I've got
I risked off 1 here into previous low. Again, need to see a push above. Still just an uptrend. Took off 1. I've got 2 left. Just off of the hold of push over 40s. I'm looking for, again, this like 56 first, and then we should be able to rotate back up to 75, 6 area, right? Just value high if we can make a POC supportive. But so far, it looks good.
Shortly expecting comments from Bank of England's Mann.
And again, this 15-minute VWAP here is like the pivot, right? We're back to these POCs where the seller is. We need to start to make this shift, right? Where we're able to build above this purple line, start to see buy-side interaction above and not below. As long as we can do that, right, we can get some continuation going. I hate it looks so bad.
The ability for farmers across the country to be able to hedge their grain, corn, soybean, livestock in a new Basel III conversation, and ultimately eliminate the downstream effects on American banks being held to higher standards. And
is it that 50.5 level? What is that?
So with that, I want to readdress your team's attention to the letter I
That's what I have. Levels.
Specifically emphasizing the negative impact of
Same.
increased bank capital requirements on the economy, our constituents.
As we push in now, I'm exiting one more into POC here. One runner left for our move to value high if we can build above POC.
Concerns from our ag growers, including our farmers.
Let me just say that we're
It's good though.
aware of the concerns you're raising.
New 15s have opened.
And I'm not going to be too specific about things, but we're quite aware of those concerns.
I certainly hope your team gets the opportunity to hear that because it's one of the most painful things I'm hearing back in my home district. Would you agree that the end user's concerns could have been mitigated, maybe at the front end of this, if
we've taken out that poor high,
or say a farmer in my district had been included in those opening conversations?
we now watch to see if N can hold POC as supportive, and we can get over our ETH high. Right? If we do that, then we rotate up to our next target, value high.
Coming from this proposal concern entities outside of banks, as you know. A lot of those were from the ag industry who felt that they had no voice in this and were a recipient of things that really harm their businesses. With that, I want to read quickly, former Treasurer Secretary Larry Summers was asked about Basel, and he said, quote, "We're going to need to prepare for consolidation in banking in the future, quite possibly some even further evolution of lending away from banks." Now, I'm going to note here that Iowa has over 250 community banks with assets under $7 billion. His commitment.
Oh, nice.
Are of great concern on this.
Yeah, like I feel like for a lot of people, if they want to be here in the morning and I haven't logged in yet, like you just need to memorize that setup. Like we should all be familiar. It's something that we've taught before, but like that failure at the high and then retesting our opening price and then holding it as resistance and then filling the gap is such an easy setup that you can put into your playbook as just like an actual mechanical setup. It's very good if you want to play morning. And that's really like all the then you're just waiting for IB to close.
I would agree with you, Mr. Chairman. We don't want to be
Glad that it played out. I love it when we have like a lesson and then say it.
serving a local community. As we look at Basel III, if it's finalized in early 2025, does that mean we will push implementation back to 2026?
I don't know exactly what it would be, but that's something like that is right. We'd have a typical phase-in process at the end of the, quite a lot of work to do to get to a final rule.
Testing our ETH high now on NQ.
I don't know exactly what the date would be.
Thank you, Mr. Chairman. I just wanted
Russell rejected our value high again. Still stuck in this range. Again, move stops up a bit more aggressively, I think, with the Russell rejection, just in case this is going to have to rotate fully down and it's the beginning, our first signs of weakness in the market. NQ still has some room. I still would love to see this push into 75s. We are just looking for day open and our POC here to be supportive, right? That's all we're watching for now. Can we now build here for that rotation up? Can we follow ES, right, and break outside of value and get nice expansion? As right now, we are now just rotating value.
And again, these are brand new decisions. There are several of them, and it's way.
Where are we if we look left? Well, this is where that large seller was, right? As we push back up into this, and so we should expect some resistance here. It only makes sense, right? Our ETH high, our overnight high, where we were unable to get over in the Globex session. We're seeing lots of selling pressure above this area, so we probably are going to need to develop this out a bit before we can continue there. And we also have that pearl in on RTY here, letting us know that that's was most likely going to happen, right? Short term, we got to build this out. See if Russell can maintain these higher lows and start to rotate back up. We need to see if ES can flag here, right? Hold our value high and not have to retrace this entire move and build out some of this poor structure that we're seeing here. This tail. Look at the volume difference between this area. And we're seeing that. Not a lot of participants up to build out this structure to show that this is willing to expand. NQ, just back to POC, immediate bounce. Again, probably just need to build this out a bit.
We've enjoyed our conversations with staff as well. Can you commit to directing your staff to finalize and support passage of stablecoin legislation this year?
So we've been, really pleased to take part in this process and, very much appreciate being included in it, and we'll stay with it. We think it's really important that we have a federal framework for stablecoins, and again, we'll be all in on working with you to get that done.
Thank you very much. Big issue for the folks that I represent, housing. The rising cost of housing hits my constituents especially hard in North Carolina. Our ranking member, Maxine Waters, has made this a big priority for the work that we do in the committee. In North Carolina, we've got 343,000 households that spend over half of their monthly income on rent, leaving little money for other expenses like healthcare, transportation, and food. Access to safe and affordable housing is essential to the well-being of working families and individuals in North Carolina and around the country. Chair Powell, despite the strong economic trends you mentioned in your testimony, housing prices and median rents have increased by nearly...
What's the first payout bonus? Is that where they like cover your eval fee or something? Is that the fee thing?
In fact, housing costs continue to outpace modest wage gains. High interest rates continue to add to those costs. For example, high interest rates make it more expensive for homebuilders to finance new housing. High interest rates also cause landlords to change higher rents and lead to higher mortgage costs for would-be homebuyers.
That's really nice that they did that.
Correctly focused on bringing
It never really made sense that it didn't.
goal, but have you
Like
considered
all services should.
housing
I
costs
hate when like services have like a arbitrary cap.
keeping interest
I'm having the same issue with that AI music app. It's like I don't use it enough, but they don't give me more credits per month if I don't use the credits that I don't like bank them. Why?
Pretty serious housing shortage, and we can't do anything about that.
Arbitrary limits to the
Then the
worst.
pandemic comes along, and we really think the best thing, the most important thing we can do for the housing market in the medium and longer term is to
But that reset banking is going to be really great. Those that have a bad month after having an eval that's been
no one knows exactly
after you pass an eval, and then like you'll be immediately able to get back in without having to. It just means that like if you already have a live account, right, or a live eval, and you don't need to use your reset on monthly rebilling, that it will then save so that you can use it again later. So they'll start stacking.
work through interest-sensitive spending. Housing is maybe the most,
As it should, with all services, should already be doing. I feel like it's so sleazy that they added that.
We have really significant effects in that market, and it's tough on people, but this is the path to getting inflation down, which will bear fruit for many, many years.
Thanks so much. I don't think I'm going to be able to get in my next question in the limited time I have, but I wanted to give you this opportunity if you'd like it. I've talked to you privately about this and have a pretty good idea what you'll say. But if you would like to say that the economy is heading for a soft landing, you're welcome to say soft landing as much as you'd like right now.
I'll say, for some time, I've thought there is a path to getting back to full price stability without, while keeping the unemployment rate low. There is that path. We've been on it. We're very.
Yeah, it would be really ideal if we were able to hold the day open POC here.
The risks to the two mandates.
Powell says
Very
there is
ideal.
a path to price stability while keeping unemployment low.
Getting inflation down. The job is not done on inflation. We have more work to do there, but at the same time, we need to be mindful of where the labor market is. And
Not seeing a ton of buy-side interaction as of yet, but we are seeing some passive buyers absorbing sell-side here
Powell says
at
we need to be mindful
55s.
of the labor market, as I've seen.
We just need to see
considerable
follow-through
softening
from
in
that,
there.
right? Where we then see active market buyers
The gentlewoman from Texas.
pushing us up and breaking this downtrend.
Thank you.
If not, then we're just going to have to
Thank you,
build this out a bit more.
Here today, I appreciate that. I represent a working class in South Texas. In fact, my district is mostly Hispanic, one of the most Hispanic districts in the entire nation, over 80%. And my district is also a rural community. So the topic today greatly affects my constituents and is something personal for me. That being said, the population that I represent is a population that the Federal Reserve research has shown disproportionately will be the hardest hit in inflation. That being said, higher prices due to Biden's induced inflation is something not only the nation is feeling, but my constituents are they're feeling it at the grocery store, they're feeling it at the gas pump, small
I think if
businesses
again, like this
feel
52
this.
area doesn't hold, that
And
we're gonna have to back down
we know that
10 points
cutting
slower.
back on
So retest these
benefits
buyers at 42,
people who are living paycheck
42,
to
43.
paycheck, they still can't get away from these
Just again,
increasing
building out this
costs
area.
at the grocery
Russell is able to
and
hold a
gas
higher or low on our
station.
15 back,
Even
our white
small
box here.
changes have a
Just
big
coming back up to the range.
impact
ES
on
still looks like it needs to build out this area a bit. Again, just flagging here,
recently said that the cost
making
of the
this
4th of
tail a little
July
bit more structurally
parts of the
sound.
4th of July celebration had
And NQ just kind of random walking
increases.
around
The headline reads,
our
record
POC.
high 4th of July cookout costs, inflation.
Need to see that push over ETH high for that.
This report says that
Or we
costs
just
were up
expect
5%
rotation through the
from
range.
last year and up
Still ES
30%
and RTY can
from just
give us a bit more.
years ago, all during the Biden administration time. Now, the Biden administration wants us to simply forget about the last 3 years and the pain it has caused families.
I'm really paying attention to the 50-minute structure more so than like again, we know that there's a seller above here, and we immediately reject off of that. We are coming back down to now test to make sure our 15-minute VWAP is supportive, where all of these active buyers are below us on this huge mother bar that we got off the reversal 3-bar here. We now need to see the ability to bid here and hold. Do I have an exact level for that to play out? No, I don't. But I do understand that this is where we want to see that buy-side interaction occur, because we can see all of these active buyers below us, right? So we're just looking for this pullback level and trying to get a higher low pullback level. I don't have an exact level yet because the market is very passively selling while we build this out. But we are holding where we need. 48 is kind of your first level view up, but this 48 to 42 area is really what I care about. 42 being because this is the value high of this candle, right? We don't hold here at this 42, and we expect a rotation back down to POC of the candle. You can see this might be a bit hard. You see this white line here? This is our value high of the candle. This little arrow is. This is POC of the candle. This is value low. So as long as we're maintaining this like VWAP to value low, I still think buy side still has a pretty solid chance for higher. 2 minutes left until it means.
So savings go up, and so people are spending a lot. Meanwhile,
Chair Powell, I have only a minute left, so I yield my time back. I want to shift gears real quickly. I continue to believe that the federal banking agencies, including the Fed, should scrap.
From what I understand, the previous 15-minute NQ candle did see a low pop print, but trapped sellers at the bottom with higher volume overall on that footprint, indicating a possible reversal. Yeah, sure. So what we're seeing though in that footprint candle is, do you see how these are all red? So I'm sorry, I'm just getting to your YouTube comment now. I don't check very often. These are market sells, right? So these are negative deltas. But what we do see is no ability to move way, right? No continuation down. And so we have market sellers who have tried to aggressively push price down, and we've held to that area, right? The 700 to 705 was where saw buy side absorption yesterday, and kind of a short-term pivot on the day. And it was an immediate interaction. So all of these people who tried to market sell price through this area, we immediately saw a huge bid off of it, right? And immediately we just filled those orders and were able to push off. And so we have trap sellers at the lows. We then were able to push over the POC of this candle and then bid from there for continuation higher. And after that, we then saw a lot of market buys stepping in, right? Positive deltas, showing us that there's a real buyer now here, not just a passive buyer at the lows, which is what this is showing us. Passive buyer eats up market sellers, right? Active buyers are market buying. So we have green deltas that are showing us active buyers. So we had passive buyers at the lows, active buyers higher, holding previous POC. It's a very strong sign of a
I really appreciate the discussion around housing in an earlier question, because this is the greatest inflationary costs, especially in Colorado. where we have seen significant home price increases.
Because you need both, right? This is something that Mario's talked about a lot, but just because we have someone getting absorbed at the low does not mean we reverse, right? Just because we make a higher low does not mean we reverse. We need to see the higher high. We need to see active buyers stepping in. There are two types of participants. We have passive and active. Passive usually is what causes the absorption, puts the other side offside. We then usually get a squeeze from that, right? From that squeeze, that doesn't mean that we have a shift in trend. It just means that those guys got caught off sides. We need to see active people, right? Shorter term buyers who are willing to market buy in and aggressively move price up, right? Because they are now willing to bid higher. They're willing to not have to wait for a limit to get filled because they believe price is going to continue.
Built up. If you look around Washington, I grew up near Washington, D.C., and
both sets of buyers have a part in a shift in it.
But ultimately, it's just we have not enough housing, and that was true before the pandemic, and certainly the pandemic did slow down housing construction. I think we'll get back to a more normal economy with lower interest rates and those sorts of things, but we're still going to have,
it's only 11:38. What?
Absolutely. When I think about
oh no, that's the last time call CTEX.
The fallout from the global pandemic,
11:46.
Changes that we saw in our economy was in commercial real estate.
It is a slow day though.
Continue to read about regional bank failures and the risks that the commercial real estate poses in the long term.
Be a long day, fellas.
On the books for our banks. What is your insight on the risk that it poses for our financial stability and what we should be thinking about here in Congress?
So the commercial real estate situation, which is, it's significantly downtown office and related retail and things like that. This is something the banks have been working their way through for the last couple of years. I think it'll take.
You guys have more questions about this? Because I think this is like for all of our Monday classes that we've been doing on like reversals and balances and all like this. This is a good like larger term picture of kind of a reversion happening or a reversal happening. Just on a very basic level, just being able to spot this kind of stuff.
The banks are aware of it. I think the supervisors have been around.
And while it's slow and we just wait for these areas to develop, now would be great for questions if you have any.
Not too optimistic assessment of how much capital they'll need, how big the losses will be. So I think we'll be working through this, and it doesn't seem to be a systemic problem or one that threatens broader financial stability. It does threaten bank profitability and those sorts of things, but it'll be with us a while. We'll just keep working our way through it.
No? Okay. The POC can hold up here. Starting to get a little toppy in the short term. Again, just building out the structure. We'd love to be able to see this 55, 56 area hold, right? POC for the higher low, this low. Oh, still just rotating tick. Sorry, around. We are trading ticks around POC. Sorry, English is hard. We want to see this now build, right, for that higher low. And the time in for ET chai. Still just within our 30-second opening range. Not a ton here.
That's how I feel about my staff. I mean, not striking me.
No, but I mean, look, ultimately, we're already very careful at the Fed about keeping within the law. We're really committed to that value, and this ruling doesn't change that. But I think we'll continue to be an institution that's strongly committed to the rule of law.
Great, thank you so much. I yield back.
Thank you.
Gentlelady yields. The gentleman from Wisconsin, Mr. Fitzgerald, is recognized.
Chairman, thanks for being here. There has been a lot of talk about Basel III. Wanted to just change that subject a little bit. Long-term debt proposal, I think, should be rewritten and reproposed as well. But at the very least,
you wouldn't
as law requires,
be
so that regional banks.
The mother bar only looks this way because it has one-sided participation.
In particular, the requirement for regional banks to hold.
So with two-sided trading, it would not look like this candle, right? Because two-sided trading and more sell side up at the highs would not create a one-directional solid candle with minimal wick. Two-sided trading in itself is telling you that there's a seller above and a buyer below, right? And we're just kind of like transitioning the range. That looks like this, right? That looks like this.
I guess
when we have an active participant stepping in, we have a very one-sided candle, and that's what creates that, you know, quote unquote mother bar. We have a active buyer who is very one-directional in its trading, and that creates that candle type.
That's something we're well aware of, the concerns that have been raised, and we're thinking carefully about how to move forward on that. The other one was pre-positioning. That's more along the lines of the discount window and the liquidity requirements, I take it. So
Right.
So, you know, we haven't made a proposal there yet. We're thinking carefully about that. You know, I think we're trying to learn the right lessons from what happened last spring at Silicon Valley Bank and a couple other banks, and one of them just is the discount window worked, but we could certainly modernize it, make it more effective. And also, we learned, you know, that bank runs are moving just a whole lot faster, at least in that case, and that even bank runs from 10 or 15 years ago were nothing like as fast as what happened in Silicon Valley. So we need to bake that new learning.
So far, it looks really good, guys. I mean, again, we held POC from previous candle. Held POC on the day as well, same level. Got our bid, retesting our ETH high. This is first target if you are scalping off of this. We need to see ETH high become supportive for it. But so far, POC rotations back up to top of range have been pretty clean. Need to see more. Want to see buying excitement above this level, where we remain just, this remains our offer.
Today, banks support the non-bank lenders and the broader housing finance system through the so-called warehouse lending for home mortgages. But I'm deeply concerned that some of the, as was mentioned by my colleagues earlier, that some of the Basel rules could harm both bank and non-bank lenders alike, kind of undermining the liquidity and kind of the raising costs of home buyers. So let me just ask, in regards to Basel III, the endgame proposal, could it make housing finance less stable, I guess, is the question.
That's certainly not the intention, and we're again well aware of the of the concerns that have been raised, and certainly paying careful attention to those.
Despite the smaller issuer exemption for debit interchange fee cap, insurers with less than $10 billion of assets reportedly lost about 35% of inflation-adjusted interchange revenue. Have you considered the impact of further reduction of debt interchange will have on small financial institutions with less than $10 billion of assets?
Yes, so that's another one where we put out a proposal. We got a lot of comments, and we're carefully reviewing those, and you're certainly aware of the specific concern that you raised.
As you may know, the latest Fed Y14 proposal, which is used to help collect data for Fed stress tests, asked banks for more detailed data on bank lending to non-banks. As a result, there's concern that the Fed may start trying to indirectly regulate non-banks in the financial.
Are you still here?
I just talked to one this morning that's concerned about that. So given those concerns,
did you finish the book last night?
Transparency in its stress testing models and the potential unintended consequences, is the Fed planning to indirectly regulate?
How far did you get?
Financial institutions.
Ooh.
These tests.
That's not the idea. The idea is we
It's getting good, right?
Mediation growing very quickly in non-banks, and we don't regulate them. We don't have a secret plan to regulate them or anything like that. It is, but the question is what risks are being kept inside the banking system, which we do regulate and supervise, and what are the relationships between these large non-banks and banks? And we don't have a preconceived answer to that.
Yeah. Especially at like 34, 35. Like 35 is such a pivotal moment that
Thank you, Chairman. I yield.
Woo. Good stuff.
The gentlewoman from New York, Ms. Velasquez, is now recognized.
Thank you, Mr. Chairman. Thank you, Chairman.
I've been waiting for you all to get to that point so that we can actually talk about it. I need Surf to catch up.
Once the Fed is reassured that inflation is under control, what does the path back to neutral interest rates look like?
I'm almost done with Morningstar.
We wouldn't reduce rates until we were confident that inflation is moving sustainably down to 2%. I think the question of what is neutral is going to be
Golden Sun in the Red Rising series.
It seems to me it's unlikely that we'll be going back to the very low interest rates of the pre-crisis period. But we'll know that from, we won't know that until we get there in a way.
And the Fed's dual mandate comprises of price stability and maximum sustainable employment. As the Fed is thinking about
I'm on chapter 41. Sorry.
rate cuts, how are you balancing
It's out of 65 chapters.
the need to maximize employment?
So over the past couple of years, we've had a very strong labor market and inflation well above target, and that has led us to focus mainly on bringing down inflation. Over the course of 2 years, inflation has come down pretty significantly. There's more work to do there. We're not at our target. We need to keep on that job. At the same time, the labor market has cooled pretty significantly. And so I would say those two goals are now much closer to being in balance. And that means from a policy standpoint, we need to be paying attention to both of them. Whereas for the last couple of years, really, we had to pay mostly attention to inflation.
Chairman Powell, I have told you that I will be asking for a status update on the Section 956 rulemaking at every future hearing.
Russell over value high here. Yes, still building the structure above. You guys see how we've been able to develop out this node now?
Why did the Fed choose not to sign?
See how that works, where just price is able to, we can kind of like figure out when that's going to happen. We had no volume and our tail looked something like this before, and now we're able to develop out this secondary node.
We've had guidance in place now for...
And with this, we now have structure to play off of, where like we know that if this holds, then we get continuation up. If this rejects and continues down, then we have sand where we're looking price to structurally. But as long as this new node is developing out, we can now look for buy side to hold the tail high or that expansion higher.
Yes, in previous hearings, you
Just a new balance, right?
that you need to better understand the problem in order to write the rule. In a speech in June, SEC Commissioner Lizarraga said, and I quote, "It has been well documented that in the lead up to the financial crisis, pay structures often encourage big bets that maximize short-term profits but ignored bigger, longer-term risks that threaten to take down the entire financial system. Additionally, since your last appearance,
Also retesting value high is supportive in our day open. See if it can push through or if this is going to reject again.
why have you
Yeah, it's a very good sci-fi series with some fantasy elements. It's basically like first book feels a little bit like a mix of Hunger Games and
I think everyone agrees that incentive compensation practices before the global financial crisis.
yeah, and then it gets into more of like a 40K feel.
Guidance on incentive
Yeah, I agree. Hunger Games and Ender's Game had a baby, which is not a bad thing, right? Like, decent series.
A lot of thought went into that guidance, and now we supervise on that guidance. And so the situation with incentive compensation now
scale
is completely different than it was before the global financial crisis.
It's
completely different.
Well, you know, the other regulators have been able to figure this out, and you haven't. But let me just say, this is not how congressional mandates work. Of all the rulemaking provisions in the Dodd-Frank, only 148 were mandatory. And of those, only 22 had a deadline of less than a year after enactment. Section 956 was one of them. And I hope that you come to the conclusion that it is your duty to issue the regulation. Thank you, and I yield back, Mr. Chairman.
Section 156 requires either a rule or guidance, by the way. It does not...
35 seconds, Antonio.
Or guidance. Thank you.
The gentleman from Florida, Mr. Donalds, is now recognized.
Thank you, Mr. Chairman. Secretary Powell, it's good to see you. Let's cover a lot of different areas of ground. According to the Bureau of Economic Analysis, since President Biden took office, the price of goods has continued to outpace family incomes, with prices increasing now 19.3%, while average weekly earnings have only increased
10 seconds.
6%. So families have fallen behind with respect to their purchasing power, that they're able to go and acquire goods. What role has government spending played in creating this untenable economic crisis?
Close that door, please. Sorry, I can't hear very well when the door's open.
I'll repeat. That's fine.
No, I heard you.
Oh, okay, okay.
That needs to be closed. So, what role is government spending was part of the story. So government spent. We had our rates really low. The pandemic happened, and we closed the economy and then reopened it. And I think you saw a burst of inflation, everywhere in the world. And certainly there were many contributors to that.
Do you think that the president, in his budget, calling for an increase of federal spending, up to upwards of 5% increase in federal spending across the board, do you think that's going to have further implications on stubborn inflation plaguing the pocketbooks of the American people?
It would be inappropriate for me to comment on the president's budget.
The only reason why I would ask Mr. Powell is because obviously the Federal Reserve is having to respond to various aspects of fiscal policy coming from Capitol Hill. Regardless of the president's budget, would it be appropriate in the current environment for federal spending to increase 5%, 10%, 15%?
Honestly, that's a question for elected representatives. We don't play a role in fiscal policy.
Oh, fair enough. Is it the view of yourself and the Federal Reserve Board that fiscal policy does create impacts on the Fed's ability to manage monetary policy for the United States?
We take fiscal policy as a given, and we're not commentators. We're not the Congressional Budget Office or the Office of Management Budget. Whatever fiscal policy happens up here, we decline all opportunities to be commentators on it. We take it as a given, and that's because we didn't run for office. We don't have that job. We stick to our knitting. And the fact that we're independent really depends on us sticking.
I think I read Bloodsong. No, I think that I stopped after that. Never got to Tower
I would
Lord.
argue that
I think I tried Tower Lord and it just didn't
you guys a lot more to deal with.
Okay, give it another.
Whatever the various burdens that come with it, unfortunately, you have to tangle with it, but the American consumer is the one that truly has to deal with it. I'm going to move on. The monetary policy report cites a pickup in immigration as one of the major factors that has improved the supply of labor. However, labor force participation rate remains below pre-pandemic levels. What percentage of the increased foreign-born labor supply, to your
I believe that it's getting a TV adaptation. Something I'm looking forward to.
What percentage of say it again, the question?
What percentage of foreign-born labor comes from illegal immigration?
I think all of foreign-born labor comes from immigration.
No, illegal immigration.
Illegal.
Illegal,
Sorry,
yes, sir.
didn't get that.
Yes, sir.
I don't know the answer to that.
All right. Well, one of the things that I think will be important to help, I guess, advise Congress on what to do going forward is if the Federal Reserve had some data to that regard to help us make further decisions into the future. Chairman Powell, let me ask you this one overarching question. Obviously, interest rates, if you compare it over the last 15 years of monetary policy, is at an elevated rate. Does the Fed anticipate any possibility of rates?
Yeah, I don't know if this is dead in the water or not,
Whether
but
it's 50 basis points, 100 basis points at some point over the next year or two.
So I guess if the question really is,
it was 2 years
where
ago.
interest rates going to settle out when all of the effects of the pandemic are really done, and no one knows. This is a great discussion to have, but I think my sense, and pretty commonly people think we probably won't go back to that era between the global financial crisis and the pandemic, where rates were very, very low and inflation was very low, and like extremely low. There were major European countries that had negative 10-year bond rates, negative, and that was not the case here. But I don't think we're going back to rates that are that low. We think that things like the neutral rate are driven by slow-moving forces, but ultimately you can see the effect. We have, our policy rate is over 5% now, and it feels like policy is restrictive, but not, intensely restrictive. So that suggests that the neutral rate of interest, at least as of now, will have risen somewhat, which means rates will be a little higher.
Okay, thank you so much. I yield back.
Thank you.
Gentleman yields back. We now go to the gentleman from California, Mr. Sherman, who is recognized for 5 minutes.
Fed's Power says it feels like policy is restrictive, but not intensively restrictive. So again, that's Power saying it does feel like policy is restrictive, but not intensively restrictive. Suggests that the neutral rate is a little higher than before.
If it's Josh's turn, it's Josh's turn.
Gentleman from New Jersey is recognized for.
Thank you, Mr. Sherman. Thank you, Mr. Chairman. Chairman Powell, you have said that custody assets are off balance sheet, always have been, and do you stand by that?
Sorry, say that again?
You've said that, quote, custody assets are off balance sheet, always have been. Do you stand by that statement, sir?
I think as a general matter, yes.
The SEC's Staff Accounting Bulletin 121 affects a core banking activity, custody. The specific bulletin requires banks to put digital assets held in custody on their balance sheet, effectively keeping banks out of the market entirely. Have the Fed and the SEC had conversations about the impact of SAB 121, and just want to get a sense of your thoughts on the policy, please?
So as you know, I think we don't comment on the SEC's policy. They don't comment on our policies either. So I know that I knew you were going to SAB 121 on that, but honestly, it's the SEC's business, not ours.
Thank you. Last month, you said that when evaluating inflation data, you consider whether wage growth is outpacing productivity. From 1979 to 2019, middle-class workers' productivity grew about 60%, while their wages grew by about 16%.
Buyers are really attempting here to get through this absorption. Still getting a little stuffed, but
struggling to make ends meet.
Maybe we can do it.
We're looking at inflation, and we're looking at maximum employment. Those are our goals. We don't really have the ability we don't have a bunch of different tools for things like what you're talking about. So really, it's just those things. Of course, we're very well aware of longer run trends like that. You have to also include benefits, though, in that analysis, which does close that gap quite a bit. You just mentioned wages.
Coming up into our next target here on NQ, into our value high.
Mr. Chairman,
yes, continuing higher after building out this structure.
Said that, quote, Iranian government actors have sought to opportunistically
Russell testing our overnight high, our Globex high at
S&P 500 hits 5,600 points for the first time.
Quote, observed actors tied to Iran's government posing as activists online, seeking to encourage protests and even providing financial support to protesters, end quote. As a member of the House Select Committee on Intelligence, I'm equally concerned about our adversaries meddling in our financial system. Can I have your commitment, or if you can discuss if you're working with other federal agencies to investigate and address foreign interference channeled through our financial institutions?
So we do take part in many of those things, especially at the staff level. And as you know, there's a lot of focus in the intelligence community, and it's very helpful to the banks, the commercial banks, and to us. But we're certainly very focused on those issues. We've got a strong team. Of course, you're never able to sleep on cyber risk, but we just keep fighting it.
I would like to switch gears to the discount window, please. Chairman, we've heard that the discount window is behind the times in terms of its operations. We also continue to hear that efforts to modernize the discount window and encourage its use will be ineffective without reducing the associated stigma. The usability of the discount window is an important tool for banks that need liquidity. Just wanted to get a sense of efforts underway to make the discount window a more realistic option for banks that need liquidity.
So it's a couple of things. First, it is we need to modernize our infrastructure. The discount window in our system is not a primary source of credit. It's a source for banks that they can use under certain circumstances. So, but we know that the infrastructure is a little tired, and we're investing in that and making it more user-friendly and all that. So that's a big project that's going on. Sorry, the second point was stigma. The stigma is that's tough. That's a tough one, and it amounts to there are a lot of ways to.
That's crazy that got through, sir. Seeing that.
In a sense, if you require banks to use
that post that you.
Then that can help with the stigma. I think. I mean, it's a big ask, but when Congress
they did everything in their power to prevent
window users, that didn't help. It doesn't help.
That must have been like very fresh.
Banks basically say we're not going to.
They wash
because it might, people might see
or they leave
troubled
every day,
and that's not what we want. We want people to be able to freely use the discount window. So we've been focused on this issue.
Yeah, it's the whole thing.
Have not made a lot of progress.
It's I don't know how it got through.
Right now,
why I'm like
very focused on
used.
Thank you, sir. I'll yield back. Thank you.
Gentleman yields back. We now go to the gentleman from New York.
As soon as they got rid of 5 points, actually.
Thank you, Mr. Chairman.
very low point.
Al, to the best of my knowledge, the last public
I see,
meeting between you and President Biden occurred on May 31st, 2022. Does that sound accurate?
I'm going to take your word for it.
Okay. Have you
I mean,
had
that's
any private meetings?
maybe. I mean, I don't think so, but
Any phone calls?
I don't know how it got through. Otherwise,
Is there any
otherwise,
reason why you've not met with or spoken?
they were
with
like
the president?
very hardcore.
I mean, I meet with when any president calls you, you come and you meet, but that hasn't happened.
So in over 2 years, with inflation still nagging us, with cost out of control, President Biden has not asked to meet with you in over 2 years?
I haven't had a meeting with him. He hasn't sought a meeting, and of course, I don't seek meetings. So you have the date.
But to your knowledge, in the last 2 years, you've not spoken with or met with the president at all?
He shook his hand in a line once, but that wasn't a conversation. It was just, Mr. President, and that was it. It was at a state dinner. I attended a state dinner a few months ago, and I shook his hand. Good evening, Mr. President, and that was it.
Does that not strike you as odd that the president has not sought to meet with you?
Not at all. Not at all. We're an
Mr.
independent
Chairman.
agency, and
Mr. Chairman, parliamentary
seeks
inquiry, please, Mr. Chairman.
I'm sorry.
Am I recognized?
I want to answer your
State your inquiry.
Thank you, Mr. Chairman. I make a point of order under Clause 4 of Rule 17 that the gentleman's words are disorderly and violate the rules of decorum in debate insofar as they are negatively reflecting upon the personality of a candidate for President of the United States.
The congressman is not engaged in any personality or in any, has questioned anything about anyone at this point. I'm not sure where you're going, Congressman. Congressman is recognized.
Thank you.
Mr.
Thank
Chairman.
you.
Happy to answer your question.
Mr. Chairman.
Thank you.
Mr. Chairman, I'd like to
Not at all
continue with the
unusual.
point of order, please.
What is your point of order?
Mr. Chairman, we have been admonished in this committee that we should not have words that negatively reflect upon persons who are running for president. This would include Mr. Trump as well as the current president.
Didn't the ranking member do a whole opening monologue
Chairman,
diatribe about some ridiculous
Would you please
Project
rule my
2025?
friend out of order, Mr. Chairman, until you rule?
Mr. Lawler has not admonished or said anything negative about the president at all. I just listened to his comments. So I'm going to recognize the congressman again, Mr. Lawler from New York.
Thank you, Mr. Chairman. Mr. Powell, you were trying to answer my question.
So we're an independent agency. The administration has been very respectful of the Fed and not, wanting to try to influence and things like that. And I don't find it at all unusual. I've been at the Fed this is my 13th year, and I think there can go by long periods of time when the Fed chair doesn't meet with the president, and that's totally fine.
Okay. Since you made mention of the independence of the Fed, and I know you pride yourself in that independence, do you acknowledge, or do members of the FOMC acknowledge, that a rate cut in September could be viewed as political just 30 to 60 days before
1 minute until new 15s so far, continuing to just bounce off of previous POC.
Decisions
On the 15-minute time frame, previous POC, holding, retesting, and then finding buyers. We need to get out of value now.
not in consideration.
This is starting to get concerning if we can't. It's fine that we're building up here, but this action there needs to be more. Right? We need to see a bit more from buy side. We need to see a breakout of value relatively soon, or I do expect us to come down further before we get conviction.
One way or the other.
I just we're not seeing enough excitement from buyers. We're seeing a very passive buying, right? Just like slow grind up. I don't want to for too much. It's just not
overall inflation. Energy
not enticing.
is up 3.7%. Food inflation up.
It's fine to build, but like the longer that we do this, the more likely that coming down to retest like 53, 55 area seems more likely. New
I
15 is
think you're
opening
quoting the
now.
CPI numbers,
I just need to see someone care get us outside of this auction.
PCE. For 25 years, the Fed has focused on personal consumption expenditures.
I still have one runner left from 45s. That has not changed. But I really want to see buyers show excitement over 75s on NQ. ES still just channeling up, right? Like no change. Russell, same thing. NQ just needs to get with the program here. Solid bid so far. Again, holding POC. We're seeing those active buyers trying to step in now.
To ship 10% more new
See if we can get
iPhones
overvalue
this
and
year
hold.
after a bumpy 2023.
On a path sustainably down to 2%.
That's Apple looking to ship some 90 million iPhone 16 units in the latter half of the year.
That's the test we've articulated. I have some confidence, as I said earlier, that we are on a downward path. I think if you look at the data, it's pretty clear that, but we have not said, though, that we have sufficient confidence, and that will be a decision that our committee makes.
Yeah, I would just note, obviously, CPI, the price of goods, the price of purchasing a home, the price of a mortgage, the cost of a mortgage has been astronomical. In Westchester County, for instance, where I represent, the average mortgage cost is up $1,000 a month, over $12,000 a year. In the time I have remaining, quick question. In your meetings with the president, have you noticed any mental or cognitive decline?
No.
Thank you. I yield back.
Point of order.
Gentleman's time has expired. Gentleman from
Point of
Texas.
order, Mr. Chairman.
Point of order.
Yes, Mr. Chairman. The gentleman just mentioned the president's cognitive capacity, and I believe this to be a violation of the rules with relationship to decorum, and that this goes into a personality of a president.
Gentleman's time had expired. You're recognized now for your 5 minutes, Mr. Green.
My point of order is to be made immediately after the gentleman's statement, and that's what I'm doing.
I would remind members not to engage in personalities and comments about the president.
But Mr. Chairman, if I may, with my point of order, I demand that the gentleman's words be taken down insofar as they negatively reflect upon a candidate for President of the United States.
Gentleman from New York, Mr. Lawler, is recognized.
I'll happily withdraw my words, though everybody understood them.
Mr. Chairman.
Gentleman withdraws his comments.
Mr.
Green, you're recognized.
If I may, Mr. Chairman, his final comment was, although everybody understood them, in my opinion, that then brings us right back to where we were before he made his attempt to withdraw. Now, if he's willing to withdraw appropriately, I will not demand. But until he does so, I demand that his words be taken down.
Government's a
The
joke.
gentleman's time had expired.
Mr. Chairman, the time does not expire on the request that I've made, the point of order. The time didn't expire on that.
I recognize
Let
Mr. Lawler.
the record reflect I withdraw my words.
Thank you, Mr. Chairman.
Gentleman from Texas, Mr. Green, is now recognized for his 5 minutes.
This last episode is
Thank
decent.
you, Mr. Chairman, and I thank the chair for appearing today. I hope things are going well with
A lot
you.
more
It's a
dragons.
difficult time for you.
A lot of
And,
dragon
quite frankly,
action.
you've been in a difficult time for a number of years, and you've proved to be quite resilient and quite effective at what you do. So I thank you for what you're doing. I do want to ask you about several things, and I hope that I'll get to them. But first, there was a post.
We're watching to see if value high holds here on NQ as we push back in. Very important that we see the 75 bid. And as we push back in, this is that area we want to watch. Can we flag here for that continuation higher off of seeing active buyers willing to participate from our ETH high as supportive? Right? Got our lift up that we were looking for. We're now seeing very active buyers trying to step in to push the market higher. We need to see this flag hold and value maintain.
And is this something that
Failure is going to result in a fill of this LPN, and again, just coming back down into our supportive area. We're just watching to see if this holds. That does, we should be able to continue higher.
We try to learn from learn from events.
Thank you. Let me go on to the next.
If it fails, then we
which
start
has
to
do
look
with,
for those patients
the
back down
banks that
to POC.
are small. Let's talk about those that are less than $5 billion in total assets, yet they are subject to the special assessments of the FDIC once there is a systemic risk exception triggered. I'd like to see them exempt from that. Do you have any comments on it?
That's really, that's either a statutory matter or it's a matter of the FDIC's practice. So it's not something the Fed has any input into, really.
Okay. Let's do this next, please, as time runs out. Would you kindly finish your commentary? You were giving a comment on the pandemic and how the pandemic helped to generate this inflation, and you were stopped in the middle of your comment. So would you go back through that, please, so that the public at large can get a better understanding of what actually happened with the pandemic and inflation?
So I'd be glad to. And I think people are now, we have a few years to look back. I think the more years that pass, the clearer we can see what was happening. But I think you look back now and you're seeing this, broadly what was happening was governments did a lot to support economic activity during the pandemic. And on the theory...
Yeah, there's definitely been a couple of secondary areas to be actionable. But if you just want to coast, you know, like, there's nothing wrong with that. I'm with you.
It reopened very, very strongly. And I think in hindsight, you can see that there was just a lot of support.
Again, like, I think the hold of ETHI was very good for a secondary ad. I think this was a fine ad, value high retest. There've been a couple opportunities.
Supply chains were tangled up. There were shortages of so many.
Like, if you didn't feel confident and you just wanted to hold your runner, like, that's perfect trade as well.
The United States got a big burst of inflation, really, more from demand than other countries.
Oh yeah, for sure, right? You're reviewing, right? Like, it's crazy.
Big burst of inflation, more to Europe than to us.
It's incredibly helpful.
You wind up with a situation,
and it's going to be such a good resource for you.
Our thinking,
like doing your reviews each trade, right? And then like not having to wait at the end, right? You're learning from your mistakes and now actually not just immediately moving on to the next one. Super important.
2023 was the year when that kind of happened. So supply chain.
I am moving my stop up here as we push. We just hit $1,000 a contract from our 40 shift
last year, while growth remained quite strong. So this was the year that kind of proved that thesis. Now we're in 2024, and it's a question of finishing the job on inflation, which we're committed to do, while also keeping a strong labor market, which we're also committed to doing. And that's a balance that we have to strike in our policy. But I think we know more now about.
This is target on ES into 60s. This is your FIB target. Above this, we have ADR. Not a ton. I'm not looking for a ton here until we can get over 64s. Fully expect some sell side pressure to be here into a FIB target as well as our ADR target.
With Ukraine, is that correct?
Yes, and it's also the fact that the pandemic summoned forth a great fiscal and monetary response, and that contributed to really strong activity and to inflation, without question.
And that completes my first trade of the day.
If not but for that monetary response, I know that it's a counterfactual, but would we have possibly gone into a depression?
That's what we thought at the time, and I think mainstream economists were very concerned that we'd never literally shut the global economy down for a period and then tried to reopen it. We didn't know how long it would take or how well that would go.
Thank you, Mr. Chairman.
Gentleman's time has expired. We now go to the gentleman from Oklahoma, Mr. Lucas, who's recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for testifying today. I realize that my questioning point in the hearing today, probably a lot of material has been covered, but there's nothing ever wrong with asking important questions a second or third time.
At least you're doing it on a positive note, you know?
How members of the board would like to see a revised Boswell proposal put out for public comment, and you're working through the process with FDIC and OCC. From my perspective, the FDIC is in a period of uncertainty. Current chairman announcing confidence in his agency.
Again, like just waiting for actual setups to occur without slow action and a neutral pick can be incredibly helpful. meant that, right? Like again, like waiting for 40s was my first trade. Just waiting for us to break out of structure. I think there are opportunities lower, sure, but just waiting for that shift on the higher time frame, right? Like we started to see this reversal and be aware of it way earlier. That 700 to 705. I didn't catch that. I wasn't here yesterday, so as it was happening, I talked about it. But now I have to wait for this trend shift to occur, and once it does occur, we can now play off of it.
We've got pretty good agreement on the substance, and now it's about the process.
Yeah.
So, you know, a baseline.
I think it just really, like, there's always going to be rotations. It's just like, does it make sense risk to reward wise? I really think like one of the best things that you can do for yourself is just like, I'm gonna go back to like what we talked about earlier about the tick, but like when we have a very neutral tick, like you don't want to trade that, man. There's nothing.
That couldn't happen.
Like, yeah, sure, we might be able to get a rotation or two, but
then there would be,
like, just wait for us to not
comments. We'd have to then evaluate the comments and think carefully about them. Having done that, we'd have to write up the final version, and that would take some
But
time.
like, this was like a lot of our morning was just like,
I guess as it puts you well into next year.
very neutral.
As I mentioned,
we want to wait for this extreme, right? We want to wait for these extremes off of that zero test and then get solid trend off of that.
It's not something
we got a really nice signal into the extreme here at 500s, into positive 500, positive 500. Wait for those extremes, and then you wait for that zero hold, and then get
a lot of things that will need to be changed. A lot of good things in there. We want to come out with
that kind of stuff can be incredibly helpful to let you know.
Shift gears on
We
the
go.
chairman.
You can see like my average, it's 45 on that last one, right? Like
which
that's
is an area we've all been paying close attention to.
we're starting to like actually start to see
Do you agree that the results
a
show the
rotation
financial
that's in
system
bearish and
strong?
converging.
Yes.
See like actual step in. But like just preventing yourself from trading like this shit where we're just like rotating go in
Concerned about
like
inflation
endpoint
in the
range.
period we've gone through lately, not just the basic necessities that continue to explode, but the cost of doing business and all those other issues. The fact is the inflation's still running above the Fed's 2% target, and we've seen significant price increases in food and energy over recent years. As you and I discussed before, I started.
Yeah, I held one runner.
1977 in that inflationary period during the Carter years. Then when we went through Chairman Volcker,
I posted the trades there. You can see they all have the same entry, and then they just have 3 different.
I still remember paying 17% to borrow cow feed money when I was a student in college. I was well collateralized, but that was a bargain in the fact that the capital's accessible. So I'm particularly sensitive, being a part of that generation, that if inflation isn't effectively dealt with, it can spiral out of control. Could you expand for a little bit more about your approach in dealing with inflation in a way that doesn't repeat the mistakes of the past? I just want to avoid the mistakes of the past.
So I think really one of the big lessons coming out of the high inflation of the 70s, which we both lived through, is that it really is on the central bank to be on the case and do the job and make sure that it is fully well.
But it takes signal a bullish rotation. We can go look again, but
really that is up to the central
on
bank.
the shift away from
fully accepted or
zero
wasn't necessarily the thing.
into our negatives, and then the hold of zero, pretty solid, significant shift that by sell side is exhausted, negative 500, and then the hold of zero, a very solid showing that buyers are now stepping in or continuing higher. That's not like a new concept. Just right, we hit an extreme, and then we hold zero, and then
One last
see
question
buying
in my
moment.
remaining seconds. You and the leadership of the Feds will be there the day before the election this fall, and you'll be there the day after the election. Still be the same people.
Right, because ES and RTY were both going up, right? They were the top of their balance. So we were waiting on NQ itself for follow through. And we knew that if NQ could get over 40s, then we would then be in the same situation that ES was when we broke over value.
Coming out of COVID, everyone said a soft landing was impossible and a recession was inevitable. I want to commend you and the administration. It looks like we've seen a soft landing. We've continued to have historically low unemployment rates and historically low unemployment rates for people of color. And in the last 18 months, we've seen a 4.7 point decline in the inflation rate as measured by the Consumer Price Index. Is that the greatest decline, or I realize you may not have done the calculations, but I did the calculations. It's the greatest decline that we've seen in an 18-month period this century. Do you have any reason to disagree with that?
I hope that's true, and I'm glad you said it because it's certainly a lot. I can't validate the statement, though.
I'm sure you have a fine staff that will do the calculation, and hopefully we'll see the press release. When Secretary Yellen was here yesterday, I addressed an issue that both you and her should be concerned with. I've always opposed Operation Choke Point, where for political reasons, banks wouldn't provide or might not provide financial services. Florida and Tennessee have passed laws giving anybody who's denied a bank account or even a loan a way to claim that that was for political reasons, and it opens up the possibility that banks would be pressured by those laws to release their suspicious activity reports, which I understand are supposed to be private. And so I hope you'll work with the Secretary in making sure that the laws of Florida and Tennessee do not adversely affect our ability to deal with suspicious financial circumstances. You have a dual mandate. I think you have a third mandate that is implied, because the budget deficit poses a great risk to price stability and to keeping unemployment low. And you don't deal with spending, you don't deal with taxation. But in two ways, you dramatically affect the budget deficit. Federal government is the biggest borrower in the history of the world. Interest rates affect the forthcoming budget deficit. And at times, you've turned over to the federal government up to $100 billion in profit. And so I hope that you would consider whether your first two mandates imply that you at least have to look at how your policies affect the budget deficit. I hope that you will go with republication of Basel III and insist on that. I know you're dealing with two other regulators on that. A recent
Another hold of
assessment by
POC
Price
and
Waterhouse
bid
Coopers
continuation.
showed that the
Looks good so
original
far. Need to see ES over 64s and
proposal
bid
lead
for
to higher
continuation.
borrowing costs for
As
small and
Russell now
middle-sized
trying to
businesses.
hold our overnight high.
And in every
Again,
way,
just trending,
Basel
right?
seemed to be slanted
Got our shifting trend up
toward
footprint.
telling the
Saw
banks,
buyers were
"Go
active.
and put your money
They've
on
been
Wall
continuing to
Street, where
push,
you just
and
earned
we're
that
continuing
interest
to gain
rate.
POC for pullbacks.
And don't loan your money
No
to
shift.
local Main Street businesses because there's credit risk there. And in fact, if you had a fair system, you would.
If we can see that hold over
all
64s and this flag kind of play out on ES, we're in a pretty good situation for continuation higher, I think.
I hope also that as you redo
See.
Basel III, you treat energy tax credits, green energy tax credits, the same way you currently deal with low-income housing tax credits, that you keep in mind the effect on the securities industry, particularly municipal bonds, that you don't unfairly to local business say that if it's a publicly traded company, it counts only 65%, and that you look at mortgage servicing rights as an asset, and that you fully account for the private mortgage insurance. I know you give some credit for that, but frankly, a 80% loan to value and a 90% loan to value that has private mortgage insurance pretty much expose the bank to the same risk. I'll ask you one question about the debit cards. You're planning to provide only, I believe, a 0.3 cents additional charge for dealing with fraud prevention. Fraud is just skyrocketed. Would the Fed consider increasing the fraud prevention adjustment before finalizing its proposal?
And that's part of the comments that we've received on the interchange rule, and it's something that's a concern that we're aware of, and we'll take that into consideration.
I yield back.
Gentleman yields back, and now the gentleman from the great state of Missouri, Congressman Lukemeyer, is now recognized for 5 minutes.
Thank you,
The
Mr.
rejection
Chairman.
of our 64.
certainly
No change yet.
appreciate
Looking to see if
thoughtful
60s can
gentlemen
hold.
from
I think if
California
60s don't hold, we'll have to rotate back down to this 5650 on ES to this node
Kyle,
is
he
built out.
indicated you got a third implied duty
And
here.
nothing has changed here. Just trying to build out a node up at our highs. If this fails, looking for something like this and a rotation back down.
Not the executive branch, not the judicial branch.
Other than
The
that,
legislative branch is the one that handles the budget.
just trying to build out structure again.
Mr. Chairman?
Job.
I believe that is right.
I don't think you want our job on top of what you got. One of the things that's come across my desk in the last few weeks here is some of the legislatures this last year around the country have started to pass banking laws that infringe on federal banking laws. Have you seen this? Are you aware of it? Do you have thoughts on it? Can you tell me what your thoughts may be?
Honestly, I have not seen that, and it wouldn't necessarily come across my desk. It might come across Vice Chair Barr's desk more.
Okay, well, I was just concerned because, I mean, you handle lots of banking rules and regulations, and so we don't want to have the state usurp the duties and responsibilities and the legal ability to.
These are preemption issues?
Yes, preemption issues is what it's all about.
Yeah, that's a big deal for the OCC issue.
Yeah, so I was just curious if you'd run across any of that, had any thoughts on it. Okay. One of the things, I just got done coming out of a committee hearing with small business a while ago, and there was a home builder individual there, a contractor, and he was talking about the cost of regulations. You know, basically $1,000 increase in costs about 100,000 homes across the country not being able to be purchased because.
Watching Russell as we come into our value high here.
So it brings up the point.
Would love to see us be able to bid as we push in, make ETHI supportive.
So part of that.
If we fail to do this, right, where we'll rotate.
Or cost of compliance.
I don't actually know the answer to that, but I know we follow carefully the APA.
But I mean, to me, that's a really important point from the standpoint of how you look at rules and regulations to ensure that the cost is not going to be more than the economic benefit of what you're doing. So I mean,
another hold of our 60s on ES. Again, just stuck between this range of 1664.
Make our rules as efficient as possible. And
it's just our ADR.
To get the job done.
One of the concerns we have is with, I think the gentleman talked about the credit card situation here, Reg II. And with regards to the Chevron doctrine basically being rescinded, how is that going to affect your rulemaking with regards to some of the more recent ones like Reg II?
I don't know if I stay for the whole day.
Basel rule, are all those things going to be impacted by
Mario will be here soon.
I mean, it doesn't change our assignment under the Durbin Amendment to do the interchange.
Receive Wednesday off.
We're always focused as an institution on compliance with the law. We're a very law-abiding group.
But does it narrow your ability to go beyond or reinterpret laws and rules and things like that? It seems to me that's what the rule.
That'll be a question for the courts. I mean, the courts will be asking the same question, which is what was Congress's intent for that law, and that's the question we're asking. But what they're saying is courts will give less deference to agencies, I think.
Okay.
Again, these
is Wednesday. Oh yeah.
Decisions were just passed down. I was actually out of the country last week while this is all happening. I've had no time to be briefed on any of that, so I
might miss 21. I don't really care.
One last question. I asked this question yesterday of Secretary Yellen. What keeps you up at night? What is your biggest concern with regards to your responsibilities, to regards to the economy, in regards to the banking system? What is your biggest concern?
So for a long time,
we'll see. If it slows down drastically into the afternoon, then I don't really see a reason to sit here.
And things like that.
But I'll give it a shot.
Crises, but we haven't really had something where there's
a successful
cyber attack on a major financial institution or financial market utility. That's always been my answer. I would actually say now the number one thing that just does keep me awake at night is the balance that I talked about before, which is we're at the critical time of inflation's coming down, the labor market is cooling, and we want to get it right for the benefit of the American people. We want to get inflation down to 2%, but we want to keep a strong labor market too, and trying to make decisions that give that the best chance to happen. That is the thing that I think about in the wee hours.
You know, we've talked about this before too. You really got a tough job from the standpoint. You're trying to drive down demand in administration by spending all this money trying to drive it up. It puts you in a really big box, doesn't it? Thank you, Mr. Chair. I yield back.
Gentleman yields back. Now we have the gentleman from the great state of Illinois, Congressman Foster, is now recognized for 5 minutes.
Thank you, Mr. Chairman and Chair Powell. I guess when things are going well, it's as they currently are, it's all of our duties to look around the curve and see it, the risks that keep you up at night. So I appreciate Representative Luetkemeier's question. Now, over the last few years, there have been increasing interest in synthetic risk transfers, SRTs, or credit-linked notes, which are often used by U.S. banks to shift risk away from the banking system and as a means of managing regulatory capital. So I've been concerned by recent reports that the buyers of some of these SRTs may be investing in them using bank-provided leverage, in which case the risk could just boomerang right back into the banking system. Frankly, when I read about this, it triggered my PTSD from the AIG situation with credit default swaps during the financial crisis. Now, I understand the Federal Reserve plays a role in approving SRTs, in fact, issued guidance to U.S. banks regarding their issuance last fall. Could you say a little bit about the ways that these investments can be a safe way for banks to offload risk, and in what ways they could become a dangerous source of contagion?
Sure. So there could be a breakdown in a couple of places in the chain, as you're obviously aware. One is just that the risk isn't really well and fully transferred to the buyer. And that's just the first step is that risk going away off the balance sheet in an unconditional kind of a way, in a way that the bank understands? And that's a good thing if banks are able to do that. Then the question is it coming back through the back door with financing? And so we're well aware of that. Banks do tend to bring these things to us, and we look at them carefully. We understand some of the ways it can go wrong. And but at the end of the day, if it works to reduce the risk on a bank's balance sheet, that's something we should be okay with.
Yeah, but if you could just say, what sort of insight and control does the Federal Reserve have into all the connections, particularly when the connection may go through businesses that you do not have direct, non-bank entities that you may not have direct oversight over?
My understanding is that this is a very active dialogue we're having with banks. They want to know how this is going to be treated. They don't want to do something that is going to come back on them or that we will deny the treatment on. So I think there's a pretty transparent set of exchanges around how these things work. We're very clear on what we think our requirements are. This is what I'm told, so we saw what went wrong the last time. I think no one wants to repeat that, including the banks. So,
well, if you conclude, and as you're actively studying it, that you need more visibility into certain areas of particularly non-bank things that may be part of the chain of contagion, please let us know, because it's our job to avoid the next crisis. I think it's my personal goal to die before we have another financial crisis, and then I'll be doing my job well. Now, I understand also the value of SRTs in the U.S. are relatively small, and the bulk of these are offshore. Is the growth of this practice internationally something you're watching closely, and is there anything that might provide a sign of early trouble in terms of international contagion that might creep back in?
So I haven't heard that flavor of it, but I'll check on that and let you know.
Do you remember with AIG, the real problem with AIG falling into bankruptcy is that it would immediately put a bazillion of the European banks into violation of their capital requirements, which was major contagion. Do you have a sense of the time scale for the liquidity proposal at this point?
I think the main thing is we have this very large, important
1 minute until new 15s. Retesting our 64s on ES, top of range. Russell's still unable to really get a solid bid here at value. Still waiting to see if this 5820 will hold and we can get back over ETH high, or if we're going to have to come back down to POC in that VWAP area before we find that Russell low. Again, would love to see this 64 become supportive on ES for that continuation higher. There's been no change here. 60 to 64 is your current range. And Q still just drifting higher slowly.
Is it just going to be in the direction of sort of
25 seconds until new 15s?
Current capital requirements, or will there be areas where it's actually strengthening them?
Oh, no, there will be a capital requirement in it that is consistent with Basel III, and a capital increase that's consistent with
My
Basel.
question is, if you look at what the original proposal was compared to, what you intend to put out, are you moving in the direction of more toward, the current situation? And if so, if you can just interpolate, it seems like if you have comments on the proposal you put out, you understand comments on the status.
215's opening.
Somewhere between that. Then maybe you don't need another set of comments because everything that can be said.
Fed bids for 10-year notes totaling $6.3 billion.
But that's essentially right. You have current levels of capital, you have the proposal, and you have, which is a lot of gold plating, and then you have where it's shaking out, and that's. But it's
so I just was wondering why you need more comments.
There are many different pieces. The answer is there are many different pieces of that.
Thank you, and I'm over time.
Gentleman's time is up. Next, the gentlewoman from the great state of Indiana, Congresswoman Houchin, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you to the ranking member, and thank you, Chairman Powell, for coming to speak with us today. It's been a long day, so thank you for being here this entire time. One of the greatest strengths of our financial services industry is the diversity of our banking system. I know firsthand how important it is for us to maintain options and choice for Americans, whether it's somebody looking to open a savings account or take out a loan to start a small business. Increasingly, however, we have seen consolidation in the banking industry and increased difficulty for smaller financial institutions to survive. One of the reasons for this is an excessive regulatory burden that many of the smaller banks face. While this can come in the form of new proposals and adjustments to liquidity requirements or to things like Basel III Endgame, it can also be due to outdated technological capabilities at the agencies and inefficiencies in and within the examination process. Chairman Powell, could you just talk about what steps the Fed is taking to upgrade technology and procurement procedures and update training practices to ensure that the banks that you regulate don't face unnecessary burdens?
So to your point, the number of banks in the country has been coming down for 40 years, and there's consolidation going on for a whole range of reasons. We're not trying to foster that. We're not trying to push that, and we're aware that, high fixed costs from regulation may be one of the reasons for that. So we do try to keep that in mind, particularly for the smaller institutions. On your question around, IT and specific things, I might take an opportunity to come back to you with somebody who's closer to the specific supervisory practices.
That would be
Fair
great.
question.
That would be great. And just for reference, I was
Russell testing our ETH high as supportive, trying to build back above. Looks like we have paths. Very important that we are able to hold here for that continuation higher if we're going to do it. 64 is trying to go supportive as well on ES. Still fighting here pretty hard. NQ, we're looking for this pullback into this blue box here, seeing if buy side can interact. This is the ideal pullback level. If this does not hold as we push down, we're going to have to come down further, down into 1920 area. So really would like to see a bid step in here if we're going to get a strong continuation higher, right? Just a continuous rotation. If not, then we're going to need that deeper pullback to fill this LVN here. I'd be looking for something more so like this too. So really look for the bid to step in here and defend this area if we're going to get a continuation.
From outside the banking sector. Many of my colleagues here today have highlighted their own concerns with Basel III. Given the pressure that Americans are already facing with inflation and increased interest rates and housing market stalls, I would urge that you take a good long look at the cumulative effect of this rule in context with the broader economy, our small and mid-sized banks, not just the larger financial institutions. Will a meaningful revamp include consideration of the hardships that overregulations cause for smaller financial institutions like those that are essential to rural communities like mine in southern Indiana?
I think it will, yes.
And are you concerned about the consolidation that we are seeing in the banking sector? I know you said it's been going on for 40 years. Does consolidation in the banking sector concern you? And are you concerned that the broader effect of cumulative rules is potentially leading to a further consolidation?
RTY retesting ETH high.
Again, we don't want to.
And need to see a bid ideally hold here if we're going to get the continuation with
we allowed
all three
interest-rate
instruments
banking,
move
for
together.
example. Also, there,
NQ's still trying to bid here.
was there weren't a lot of economies of scale.
Wanted to really see
I
that
think
push
with all
over
the
for
technology costs, that's now
not get it. Oh, still battling here.
old learning is now not really
Again,
true.
either
So I do
this
think-
node
I
edge
think a lot
holds,
of the-
or we're going to have
a
to
lot of the,
rotate to
sort of smaller
structure.
regionals do feel that they need to grow to be able to compete with the larger regionals, and also
All we have is our shorter time frame structure to play off of. So
many,
we
communities
know
where they
that
weren't.
either
Bank
this
of England's
seller
man
is now
says supply
offside
side
and
of
this
the
buyer
economy
is now
growing
willing to
very
spend,
slowly. I still
or
see
we
labour
rotate
market
through
tightness.
this back to where
Wage
this
growth
buyer
still far
was.
away from being consistent with the inflation
That's
target.
all there is.
Way of it, if that's what's necessary for banks to compete with
I
the largest
appreciate that. Thank you, Chairman Powell, again for your testimony. Our financial system is really the envy of the world. We need to make sure that small and growing institutions have the tools
Jesus.
they need to innovate without any undue burden. I appreciate your emphasis on that in the meaningful revamp. Thank you, Mr. Chairman, and I yield back.
Next, the gentleman who set a record for a mile run this morning in Washington, D.C. From Illinois, Mr. Caston is now recognized for 5 minutes.
Thank you, Mr. Chairman. You looked much better and well coiffed when I saw you this morning than I was. Nice to see you again, Chair Powell. Just briefly on the Basel III reforms, you and I have talked about the tax equity provisions and the fact that clean energy tax equity.
Everything looks good so far, and we're just trying to build where previous sellers were. Russell's still lagging, but holding value. NQ was able to reclaim, wicks below our area, and immediately bid and push back up. Again, really want to see us back over 40s if we're going to get innovation.
10 minutes time now.
But this has
US
been
is to
very
sell $39 billion in 10-year notes.
just slow grind up, right?
First,
Like,
seeing more comments from
what
Bank
it
of
is.
England's man. He says, until I see some
Either
deceleration
you're willing
in
to play
services
fullbacks
prices,
or you're not.
we're not in a
Sooner even
position.
something temporary, because there are a lot of
In
banks that
reference
wanna
to rate
participate
cuts.
that are, I think, more cautious than they need to be right now. Appreciate that. In 2021, I think you were a part of the FSOC report on climate-related financial risk that for the first time identified climate change as an emerging threat to U.S. financial stability. Do you still agree with that conclusion?
The conclusion being that what again?
That climate change was an emerging threat to U.S. financial stability?
Yeah.
Okay. I raise that because I've been troubled, as you know.
So again, top of the hour, get the US selling $39 billion in 10-year notes. Prior bid to cover was 2.67. Prior high yield was 4.438%.
Optional and that succeeded. Number two, that the Fed, OCC, and FDIC were pushing to limit implementation.
Bank of England's man says 2% inflation we see now is touch and go. Will be above 2% for the rest of the year. That matters for my decision making.
Not propose that any of its banks be subject to an analysis of how they incorporated climate in their credit risk assessments. Have any representatives from your agency attempted to weaken the Basel Committee's work on climate risk, including by expressing concern about the Basel Committee overstepping its mandate with respect to its climate work?
Well, I guess I would say it this way. The Fed does not have a mandate of fostering an energy transition or dealing with climate change. Some of the Northern European banks feel that they do. They actually have that. It's in their mandate, either explicitly or implicitly, but we don't.
But if we agree that climate change is an emerging threat to the stability of the banking system, are you saying you're not acting on it because you don't have the authority, or you're not acting on it because you disagree with what you said in 2021?
When you say it's and I agree, there's an emerging threat to financial stability. That's over time. I think looking to the banking agencies to lead the fight on climate change is a big mistake. I think it's a job for elected people. We don't have that mandate in the United States. We can do a very limited thing, which is make sure that the institutions we supervise are aware of and can manage those risks. We are not going to be the ones who are forcing them to adopt plans to transition and that kind of thing. That's just not going to happen through the banking agencies without a law change.
So then if it is the view of the rest of the world that climate change is a financial risk and we're going to regulate our banks, is it the view of the Fed that the U.S. G-SIBs should not be required to report?
Again, we're not going to be climate policymakers at the Fed. We are not going to do that. We don't have that mandate. A key to our independence is that we stick to the job you've given us. And the idea that we should discover climate and say, okay, we're going to lead the fight on climate. It just, we do, if we're going to do things like that, we should be part of the Treasury Department.
Well, so to be clear, no one's under the illusions that you're the EPA. But, you know, I spoke with Janet Yellen about this yesterday. We have multiple states where the insurance industry is collapsing. Something like, as you know well, something like a third to 40% of U.S. wealth is tied up in real estate. And
30%.
Okay, U.S. homeowners are not GSIBs, but
So in 5 minutes' time now, at the top of the hour, the US is due to sell $39 billion in 10-year notes. Prior bid to cover was 2.67. Prior high yield was 4.438%. The auction in 10 years today faces cheapening pressure related to Thursday's release of the June CPI data coming out tomorrow, among other factors. Yields are rising from session lows ahead of this auction, which follows Fed Chair Powell's second day of congressional
Back up to our 40 pivot on NQ. If you are playing off of this 27, this is your first target.
Given mixed valuation and
Need over
yields
40.
near the middle of the year-to-date range, and the recent tendency of 10-year sales to tail and proximity to Thursday's CPI, JP Morgan strategists said that a bigger concession from Tuesday's closing level was needed for a good result. Making note of the latest CFTC positioning data ahead of this 10-year note sale as well, shows that speculators were net short 152,000 ultra 10-year note futures, a possible source of covering
I
demand.
don't know what this dude's trying to do. Like trying to get him into a gotcha.
Recognized for 5 minutes.
I thank you, Mr. Chairman, and keeping with baseball analogies here, I think I'm batting
Conversation.
cleanup. Chairman Powell, welcome in this afternoon to you. Chair Powell, in your testimony, you stated that, and I quote, longer-term inflation expectations appear to remain well anchored. Could you please expand on that for us?
Sure. So in our thinking, and the thinking of economists and central bankers, what the public expects about inflation is really important, because if you expect there to be low inflation, then it probably will be low, because you're gonna make sure that's true in your daily decisions. So we measure them. We survey individuals and businesses and market participants, and then we look at market-based. You can also derive market estimates of what inflation will be through various instruments in the markets. And
we're trying to trade ES after playing into someone. Something.
Over the longer term, and that's been very stable right through this.
So slow, man.
When you say longer term, sir, how many years?
Yeah, I've just been like,
estimating?
just in this like 64 position, and it's just chilling. Up 100 bones, so I would have made up like, I don't know, 700 if I played the same thing on NQ.
People think that'll last a few years, but one standard thing is to look at 5-year,
what is this?
Between
You're doing
year
here?
5 and year 10. That's a standard way to look, or longer term than that. If you just ask people in surveys over the longer term, you maybe don't specify, but they all.
ES is ripping.
Which is people.
Yeah, NQ is ripping higher.
Inflation will go back down
to the 2%
Thank you. Level. There has been some reporting lately on shrinkflation, and for our viewers, I'll say this is when you pay the same price for something as yesterday, but get less of it than before, kind of like my bag.
Well, if I took the same trade of buying 64s, which is what I'm in on ES, I'm up 2 points, which is $175. $200. The same trade from the exact same level on NQ just ripped.
Mention of shrinkflation as an inflation cause
in
any recent monetary policy report.
So,
moreover, a Bureau
proportionally, I would have made much more money.
Article last year looked at shrinkflation and concluded that, and I quote again, it has a minuscule impact on overall inflation. Chair Powell, from the Fed's perspective and analysis, has shrinkflation been a significant casual or amplifying factor in the runaway inflation of the past several years?
Buddy, I pressed buy market.
Greater pain on American workers.
Shortly expecting results of the US 10-year note sale. I'll be leaving with the bid to cover ratio. Do get the pre-sale when issued yield out at the top of the hour. Auction results will follow a couple of minutes after this.
The contents of the thing, and the price will be what it is, and consumers can make their choice to buy it or not. But we don't think that's a major driver of inflation. No.
I think from a producer standpoint, it probably is. If the cost of the item is exponentially higher.
It may
Fed's Powell
reflect
says, I don't
costs
think that
on the
shrinkflation
part of
is a
producer.
major
It probably
inflation
does,
driver.
but that doesn't mean it's a cause of inflation as such.
Okay, thank you. So, switching topics, the Federal Reserve has produced volumes of research over the last decade, highlighting the negative consequences of the debit interchange fee cap. Some of the economists who produced that research have even worked on this proposed rule, the Reg II.
4.286% as the Treasury's when issued 10-year yield, 4.286%, ahead of this $39 billion auction.
To low-cost checking accounts flawed, or did it have incorrect conclusions? And if not, then why would the Fed propose this rulemaking when all of their research demonstrated detrimental impacts? Please.
I am not entirely sure what research you're referring to. I'll be happy to follow up with you on that.
Yeah, I hope you are, because I know we're having this discussion about the interchange fee caps and Reg II, and I'm concerned about
Those Reg II.
that when much of the research that we have seen from the Fed, and it's been pretty steady over the last number of years, says it has quite detrimental impacts. So please, to low-cost checking accounts. So if you wouldn't mind, I would love to get some answers on that. And also, why hasn't the Fed taken into action the higher fraud costs that debit card issuers will incur as a result of the new dual routing mandate for card not present transactions? I'm over my time. If you could also answer in writing, I would be ever so grateful. I yield back, sir.
Bailey yields back, and I would like to thank Chairman Powell for his testimony today. I know you got to get out of here, and without objection, all members will have 5 legislative days.
J. Powell is done talking.
To the chair.
So Fed's Powell has concluded the testimony before the House panel.
To please respond no later than August 30th, 2024. With that in mind, this hearing is adjourned.
Some excitement.
2.58, 2.58 10-year high yield, 4.276%, 4.276%.
Get me out of here.
The US sells $39 billion in 10-year notes and awards 1.16%.
Notes are done. What else do we have left today?
Primary dealers take 11.53%.
J-Pow's done. Notes are done.
Direct 20.86%, and indirect 67.61%.
We've got Bowman speaking at 2:30. That's the last
Noting
thing.
some slight weakness in dollar after that release.
Oh, got a little freedom here. Up a whole 375 on 2 lots of ES from 64. This is huge. Booning. I'm exiting 1 here, and then I'm just leaving it as a runner, and then I'm going back to end key, and I'm just eating my stop at break even on ES. And either we're in that ES position for the rest of my life, or I get stopped out. Great end key. Terrible mistake on my part. Yeah, either get stopped out or we have generational wealth. You know?
So US Treasury 10-year yield extends the fall after the 10-year note auction, last down 2 basis points at 4.28%.
It is. There's some thick liquidity on ES today, though. Thick boys on there. Yeah, or you only have top of book, so you only see like the current bid and offer. Level 2 shows you all of the limit. Does anyone have like a target for higher on ES? Anyone do their fib homework? I don't really have much over 6. What does Mario have? He doesn't have anything until 690. 688. We need to start paying attention with into ADR. Just our next little area of resistance here for short term. If we can make this supportive over 80s, then we have like solid on the day and expansion. I expect this to kind of like chop here for a little bit. Go. Some bullshit like that. Watch like 50-75 on NQ as we go down. Just retesting that buyer. Not a ton here. Again, just like building this out below ADR. We're just watching this node. We have an LVN below this, right? So either buyers interact for continuation here, or we fill this structure and we look for dips to be bought and battle with this to back up. Which is what if I had to guess, this is more like. Four and a half minutes until new 15s. You see how in like the 15-minute we're just holding previous POC per candle and we just have trends? It's like a very easy identifier to let you know and be looking for pullbacks. And it's been the same way since when we first talked about the reversal actually happening on a 3-bar reversal at the low, the trap sellers at 700, 705. Like it's a very easy indication of like what kind of trade type you should be looking. Yeah, I think that's fine with the stop at break even there, right at quick low. You just need to get over this offer at 60s. 60s doesn't push, then expect one more leg down, I think. The key for higher prices is always just like keep this in your head. This is how I visualize it. It's like these LBNs that we create, we want to see buy side interaction in, right? We want to see buyers bid off of these areas for higher prices. It's not as bullish if we have to come back down and retest structure like this, but if we can now hold imbalances that we've created on push up, that's incredibly bullish. Right? If we immediately come into this and then find liquidity for higher, that's great. If we have to come down further, it's fine. It's more of a structural test, and that's good. But like, just think of this is an imbalance, right? We want to see buyers present here. If we go below it, then we have to battle with this level on the way back up. That's the issue with it, is that imbalance edge high, right? Our LVN edge high then becomes our offer point if we do look below, right? All of a sudden, then you have to contest with this potentially happening. Which is why it's like you want to see how we interact at our first interaction of it, and then how we interact at the fill of that level of LVN. Does that make sense? Because what does it mean if this becomes resistant? Well, that means that this auction above is no longer holding, right? And now sell side is offering where buyers were on this auction, and we're pushing back down to a previous auction. You know what I mean? All right, let's see if buy side's willing to interact in this node below. Anything that uses volume, it should work. It's an auction, right? So if it doesn't work, then do we really have a system that makes sense? Right? Like it's not just an NQ or an ES thing. It's anything that uses that's a traded product that has volume, right? Like it's just like demand and supply do not shift. Things that are more liquid are it's going to work better on, right? So like we like it on NQ and ES because they're incredibly liquid. But you expect more volatility in things that are illiquid. But like the same concepts work. You see how we're now battling with that LVN? We got our bounce at the fill, and now we have to get back over. Exactly what we were just talking about. So if you only have one lot, either your stop needs to be break even or you need to be looking to take profit if we can't get through here, right? Because if we can't, then we just are going to continue going down. It's very important that this becomes a supportive level. Let's retest for a push up, right? Reclaiming this LVM now that we've filled that structure. We don't know if we're going to be able to get through. So it's always makes for first PT on a
Shortly expecting the results of the Fed reverse repo operation.
There's second PT, right? So does that make sense? Like, I mean, I walked through this entire thing. Hopefully that was like very clear, but if not, questions, please. Back to our offer here, top of range.
$76 counterparties take $422.147 billion at the Fed reverse repo operation.
What time is it in Japan? When does the album come out? Used. Oh, it is out. Huge. Yeah, right. Like we're still just holding the same. There's no shift. Still just need to breach over that 70 and make it supportive. Just building out structure up here. Things to note, Russell back into value. It's a very clear shift. So need to see buy side show some very aggressive bids soon as we push into this area that get us back over this high if we want to pair, or expect ES and NQ start slowing down quite a bit in the in our momentum. You can also see that with just a very clearly up at our highs on footprint, right? With us now unable to hold over POCs, right? So we're getting another area of balance up here where we need to see if we can come back down into our previous structure here, which is all I care about, this 44 to 51 basically. Like this holds, or we start to come back down to fix some of the structure below us with the Russell weakening. So because we're no longer respecting just higher lows, right, and higher highs with POCs holding as supportive on every sort of retest, we now are in a period of balance for me. This is how I view it. So because we're just in an inside candle, right, it's very clearly balanced where we're no longer, we're unable to push above and we're unable to push below the previous bar. So we are balanced inside that candle. So this should be a pretty strong decision-making area. Again, Russell is weak and looks like it does need to come back down to that like POC day open area. But if this 44 doesn't hold, I'm fully expecting us to have to, excuse me, rotate further down. Just as we build up here. And I think we just keep an eye on 39s for any sort of like dip buy liquidity and then a pushback over 50s. That would be your most bullish case here, is a move into this node to fill LVN and then immediate reclaim of 51s. If that doesn't happen, then it's just coming back down to our previous basing that we did. So we just really need to see buy side interaction here. Russell find this low and recover just like, I mean, everything that we have drawn, right? It's pretty clear. But I really want to spot out that like how you can see that this is more balanced rather than the one-time framing up action as before. So I think if you can visualize this stuff on the higher time frame, you'll have a better understanding of what you're looking for and what kind of play types you should be kind of executing, right? So like when we have very clear trend up and we have these reversals and we're clearly holding just previous POCs and we're just really holding like these halfway backs basically, right? We have very solid trend, and pullbacks, looking for pullbacks makes a lot more sense. We are very clearly in an area of balance right now. That is clear for everyone, right? Just want to make sure. Like we see that we are just trading within inside a candle. Our previous candle. So it's a decision-making area. Yeah, okay. That shift is important to be able to visualize because you're still going to be chasing pullbacks and you're going to be like, why isn't this working? Well, it's because we've had a shift in our structure, right? Like we're clearly not doing the same thing we were doing earlier. We found a potential local high. Now we need to decide if buyers are going to be able to hold this area and build this area out. And after that, we can then push off of it. Use for visible range. So for the tick, you talking about row size? Is that what you mean by tick size? This is just resolution. Yeah, so it's just if you want more resolution, it doesn't matter. You could have this on 50 if you want, and it's going to do the same thing. It just won't have as much resolution. I just set mine to high so that I can really show you guys these edges, but it doesn't matter. what matters is being able to distinguish LVN to HVE, right? Like we want to be able to see where our low volume nodes are and where our high volume edges are. So I think that lower resolutions can actually be very helpful if you're newer, because they're going to define your edges quite a bit more because you have less resolution to work with, right? So like these edges are very clear here at 53, at 60, right? At 4375. So like they're very defined for you here because we have a lower resolution. Whereas if I went to 2000 again, right? Like they're still here, but there's a bit more wiggle room of like, oh, where do I put it, right? And then you get into this like mindset of like, oh, it has to be perfect. So kind of limiting your resolution can also be helpful. It's really personal preference. They show the same thing, right? Where's the shift? What do we see in this price action, Adam, that's different about this uptrend compared to what's happening here at the highs? What do we see? Right, sure. POC shifted down, but what's the difference on all of these candles before? POC was shifting up, right? POC shifting up, and then price was able to hold that level as a higher, our higher low, right? On every contest. This is trend. We're trending up. We're seeing buyers interacting and then bidding off of these levels, and we're continuing to show a willingness to move higher. And we're then one time framing up, right? We're pushing off of that candle. Very clear buying interaction. What's the difference with where we are now? Well, we're inside the previous candle, the wick high, the wick low. We are in an area of balance where we're having multiple POCs stack instead of just pushing up on each candle, right? When POCs stack, it's an area of balance. So it's a very different thing than when we were in a trend. Is the overall trend still persisting? Yeah, totally. But is this an area of lull, right? Where we're now figuring out if we're going to go higher? Yeah, and is that clear from this view? Which part are you struggling with? We're no longer doing the thing we were doing before, right? So it's a period of decision. Yeah, right. So you need to see a break out of this auction, or you should be looking for this to persist. So what we're seeing now is this is our high, this is our low of this current auction, and we have a ton of volume in the middle right here, right? This is where POC. So now you have a distribution, right? Think about it like that, where we have very clear value low, value high, and POC, right? Point of contention. So these dip buys that are being bought, we need to see this continue to hold, and if we're going to continue to trade in this, we should see rotations that look like this. I know that's disgusting, I'm sorry. But like, we're stuck in here. So we need to see a break and the ability to hold off of this area to get out of here, or we should just continue to think that this is either a topping formation, right, where we're starting to curl over, and we look for a push and reversion back down to where buyers were previously, or we should stop looking for long breakout continuations because we are no longer doing the thing where that was the best move, right? We shouldn't be looking for expansion right now, in my opinion, right? This is very clear expansion continuation. Coming back down, rebidding off POC. Coming back down, rebidding off POC, where our previous buyers were. Now we're in a period of stagnation, which is fine. We need to build out this area anyways, but like it's a very clear shift from the structure below if you just look. Okay, yeah. This is another period where we started to get into that situation, but we still were able to hold higher POCs, right? So the action was two-sided, but we were still able to hold and maintain higher lows while still maintaining higher highs, even in this area of balance where we had some chop. That is no longer the case here. overall trend is still persisting, but it's just a period of chop. So the sooner you can spot that potentially could happen, the better off you're going to be, because you're going to stop positioning the same way you were when we were in solid trend. Yeah, exactly. And that's what I'm saying. It's like you should be looking for periods of previous liquidity, because when balance occurs like this, only we're going to be able to hold here for so long, and we need to be looking for where previous areas of buyers were. And so, yeah, what Aram is looking for is great, because that's a balance play. That is a break of balance, a liquidity grab, and then a return to balance. Again, it is different than trend. And the reason why he's looking for a pullback and then a bounce back is because the overall trend is still bullish, right? But because we've now we've hit a lull, right? There's only going to be so much liquidity that's present here, and we're going to have to come back down and retest. That's usually the scenario that happens. So, you know, coming down and coming in for those like forced areas of liquidity, and then popping back up to see if we can get back into the auction. It's the same play that Mario loves, is that return back in. On that return, then we can play through the auction. Or you just wait for expansion, right? It's the same thing. When trend is no longer bullish, are you talking about on a smaller time frame or the main structure? Because we still haven't been able to make a lower low, right? Like we have a short downtrend right now in our balance period, but like our overall shift hasn't occurred where like we're breaking our uptrend. So like there's nothing really here yet. It's only just balance plays until we break a balance. So I guess to answer your question is when we break balance and then fail to rebid inside. Right? Like if you think about, when do we know when a value profile isn't going to hold anymore? When do we know like our value area isn't going to hold? Is there a very clear shift that we can see? Yeah, right? So like if we now start showing acceptance below our balance, then we know that the trend has shifted, right? If we're in a box and we're doing this, and then we're coming back in and then coming back through, and then we're coming out and then we're coming back through, but then we start to see this failure here, that's a very clear shift. Right? So like that's when we know, is when we have a shift in the auction. When we have a shift below value, and then value is clearly showing in a defined area that it no longer wants to hold, and we see the offer stepping down into it and bids willing to push through. We're not seeing that yet, right? Still just holding our area where we wanted the price to hold. We're still seeing the same sellers above, right? It's very balanced, and we're just waiting. Can you take shorts? Yeah, totally. Right? Into these highs, you can totally try to go for shorts. But what's your target, right? And that's the point I'm really trying to get at, is that this is a balance trade until we break balance. So if you're shorting, your target is down here, right? Where the buyers are. And until these buyers leave, right, like that's your target. If we get a push and then these buyers are now off sides, right, now you can look for continuation down. But until then, like your long target is the top of the range, your short target is the bottom of the range. Until we see an offer or a bid step in that changes that paradigm. Does that make sense? Right? Like a balanced trade can turn into a continuation trade, but like that we don't know, right? Like that's the thing. It's like there is no way to know if that's going to hold or not. Like we can kind of like decipher it in some of the order flow we're seeing, in some of the price action we're seeing, but we don't know if someone's going to hit the bid or not, right? There's only so much we can account for, and right, that's why we take profit into known areas until we see a shift. There is no 100% way of knowing. I'm gonna grab some water because I'm really losing my voice. I'll be right back. Yeah, I think Surf said everything that needs to be said there. I don't think it's necessary if you are looking at structural plays and stuff like that, and you're just playing off of that with a very clearly defined risk and reward, right? You have your setups, the setups play. If you're looking to be more in a scalping mindset and looking for very clean entries, level 2 data is definitely something that is worthwhile to understand where liquidity is present. Something you can do in the meantime, if you have another screen that you can like, you can use bookmap, right? There are bookmap streams that show level 2 data for you. They're going to be not real time, right? Because it's YouTube, so they're going to have a slight delay, but that shows you where liquidity is. So you can watch those, and it's showing you the same thing. Also, top of range here on NQ from our hold are 44 to 50. Russell's still following pathing. Just need to wait and see what happens. Yeah, right. So like, it's, yeah, I mean, level 2 is great. Is it necessary? If you have plans already made and you're playing off of like your setups, no, I don't think it's necessary. I think it's very helpful though if you want to get a deeper learn, if you want to learn more. Right? Like I don't know how to answer that question. Like, yeah, it's having more data and having more variables at your disposal is always going to be better. You want to have a deeper understanding, right? Like more data. Do I think that you could be profitable by hitting buy market and buy sell without ever looking at a DOM, but just trading the things that we've taught? 100%. Will it require a bit more patience for your setups? 100%.
So Biden aides are to brief Senate Democrats at 12:30 Eastern Time on Thursday.
Yeah, right. And that's why we wanted to really focus on those variables, right? Answering those questions before you take a trade, because the only thing you can do is answer those questions and it meets the criteria, and then you take a trade, right? That we're giving you we're adding certainty to trades by having criteria that needs to be met for you to take said trade. Something that you might want to just try, Adam, just like turn on PVZ and only play the reversion signals with the set amount of risk that is allotted on each one of them. Something to like consider is like they don't all play, right? But like just playing, if we get a reversion signal plus a stack signal, like attempting it, right? This is your invalidation for both stacked and reverts. You get your candle, we're getting a target. Like just like playing stuff like this at the highs and the lows, and just taking those kind of plays and just like getting a feel. Like here's our reversion at 700 to 705 with invalidation. And then it's like, okay, well now I'm looking. Now you're playing. Same thing here, right? Like it's just like understanding where we're looking for reversions, and then like setting your stop there and having one on and just hanging out. Like you do stuff like that. I think you just need to get over it. I don't think there's really anything. I don't know. Yeah, right. Like that's the only thing that you can do, right? And the only thing that you see setup, take setup, and then the only thing that's at your disposal is just the amount of risk that you put, right? Like if you're over leveraging, yeah, it's gonna feel like shit. And then like, okay, you have one setup and then you've nuked your account. Like, no, that's not how it works. Like you need to have smaller leverage, right? Smaller size, have enough room to be able to take multiple setups a day, have wiggle room to have failures, but know that you traded what you thought was right, right? When you thought you didn't just press randomly buy and sell, and you'll make money over time as long as you're playing the setups that have some success, like, and you're keeping your risk in check. Yeah, there's nothing else that you can do. If you over leverage on trade, right, and then you blow up your account on the first setup, and then the second setup works, like, okay, well, like that's a you problem. Remember, to pass the 50K combine, you need to make $200 a day for 5 days. This is not an unachievable goal. To pass the eval. Is it 3K for 50K? My bad. I thought it was 2,000. Yeah, no, but what I'm saying is like you need to just make like $200 as one trade. That works. Like you don't need to be making $1,000 a day to be profitable and to like compound gain. Like, it's great if you're making $1,000. It's great if you're making $500. But like, if you can make $200 and you can do that consistently, like you will pass your eval. You will be able to take out money as your confidence goes up, right? You can add more. You can trade more. But like you don't need like you're overcomplicated. I'm not like you, Adam, specifically. You guys in general are like trying to do too much.
US stocks extend gains.
And then you blow up your account because you're chasing gains, right? Like imagine if you just you had a great morning, you hit $600, and then you left. Like, that's an amazing day. If you give back that full 600, now you're having to like make up for it, and now you're chasing, and now you're having to battle with drawdown, and you get back to neutral, and then you try again and again and again, and now you're stuck in this loop trying to make back for what you lost. Just like you make your money dip. Have out of here. Yeah, sure, there's gonna be more opportunities. You don't have to be here for them. Who cares? Your job is to make money. You've made your money. You did your job. Go enjoy your life. But I think it's like really important to like remember that. Like sure, there's more money that can be potentially made. There's also way more money that you can potentially lose. You did the thing. You made your money. Your job is done. Anything more is now in the hands of your God, you know? Like I don't know. I think it's really important that people like recognize that their job is not to catch every rotation, not be here every day, not make the most money possible. It's to be profitable and be able to do it on a long term. And a lot of people cannot manage to stay here all day profitable. Like if you can't trust yourself to not press the buy button for an hour or the sell button for an hour after you've made money and wait for your next setup, then you should not continue to be here every day. You just gotta make it and then dip. It's not real until you transfer it to your bank. Pushing into our next target here on NQ into our 81. It's our value high. Or sorry, not value high. Sorry, that is our ADR high. Need to make that supportive. This is just like the top. Need more. Russell did what we wanted. We're now battling for our ETH high as supported off of our hold in our dip. Can we now make this supportive is the question. Or is this going to be high? I'd like to see something like this occur and then a flag build of value. That would be ideal. Would like us to not just come back to this offer and sell. That would be less than ideal. Am I flat? Bro, I'm long from 64. What do you mean? There's not much here for longs for short term. We just need to see if bids will continue to hold POCs here. Right, we're retesting now. Previous POC. We need to get over this 81. Yeah, it's scary at the highs. We're clearly seeing absorption from sellers. You see all these market buyers who tried to push and failed. But the only thing that matters right now is, are we maintaining C for answer so far is yeah, we are, right? Immediate bid off of it. If this starts to become resistance, then we can start to worry. But as of right now, dips are being bought into our POC from previous candle. And that's a good sign for higher prices. If this starts to go resistance, right, then we're going to be looking for larger pullbacks back down to probably like around here. But until then, right, like we're still just maintaining. Just another range. A minute until new 15s. Yeah, exactly.
So the Bank of France sees French second quarter economic growth of 0.1% versus the earlier second quarter forecast of 0 to 0.1%. What's going on? Hello? That was weird. Another hold of our 67 to 70, pushing back up to our highs at 81. That is your risk off until we can make it supportive.
Again, just finding areas of support. This is just POC, multiple POCs in our balance. We're saying that it's continue to hold, and that is that. You just hear my dog. She's on her back rolling. Ridiculous sound. She's done with me trading today. Mic her up. Either a headset. You can hear her sneeze all day. I should get a dog cam for my stream. That's my webcam. I was thinking about getting one of these. What are our thoughts on this? They're pretty cheap. Look at this little snuggle bed for your dog. Like, how are they cheaper than just like a regular dog bed? And they're like Tempur-Pedic. Sellers are really trying to push us below here. If they fail, it's going to be pretty rough on them. Just watching all these selling deltas as we're coming back in to retest this POC. You can see how badly they're trying to push us below. So if this fails here and they're unable to push below these selling deltas, I fully expect us to start to really see some buy side pressure above 80. Does my dog shed a lot? Yeah, but I've got a Furminator. Like, I wouldn't buy this unless I was like, if I stayed on top of grooming her. The only way. Or you have like an outfit dedicated to snuggle time, you know? It's the only way it works. So I don't even allow my dogs on like my dog singular now on my couch. Yeah, exactly. I clean myself. I just vacuum like multiple times a week. It's like a little handheld vacuum. Keep it consistently clean. As long as you like stay on top of it, it doesn't really. Instead of like in a 3-hour chore, it's a 5-minute chore of just like vacuuming my apartment. I just put on like a show in the living room and then vacuum. I will never buy a Roomba. Refuse. What's wrong with a Roomba? Nothing's wrong with a Roomba. I just need self-discipline. If I don't have self-discipline, I will literally never leave my bed. Like I have to be very on top of myself, like my responsibilities, or everything goes to shit immediately. That's like a me thing. It's the same thing for dishes for me. Like I just use it as a drawing rack, but I like have to stay on it. Just like clean as I go. My place really isn't big, so I wouldn't want to. I just like again like I like a cordless vacuum. It takes 5 minutes. Plug it into like 3 different walls. Take care of the house. It easy. Oh, my dog would react to it. She might bite it. She hates vacuum cleaners. Yeah, I know mine. Like a studio is definitely ideal. It seems like such an unnecessary purchase. I have a very tight stop here at just the most recent low if you are playing this. Either it works or it doesn't. How you play balance. Need to see a bit more active buyers. 2 minutes, 30 seconds until new 15s. Still just in our balance here. You see how we can easily, even just via this, see sell-side absorption of the highs with POC above? You see how close POC to value high is here if I just take a range? Like there is so much selling pressure up at these highs. Do we see how we can look for this dip below and then we look for that secondary bid back into value here, that rotation back up, and this gives you a target to work with? We push up into POC, you move your stop to at least break even, or you take profit as we push into it, right? That's balance. Like, it's simple. And until we see this happen, right, a pushover and the ability to bid off of that, we shouldn't expect for. We need to hold value high as supportive. Get over these sellers and show that there's an active buyer willing to sell side absorb. Okay, into our value high of our range. There you go. There's another rotation, right? You can leave a runner in case we do push over and pop for that continuation. If not, then just done successfully at one side of the balance. Still holding our same area. Yes, testing value high now. Stops getting stopped. Sorry, shorts getting stopped out there on that push over 80. Need to see if bids will follow through. Yeah, and that's why I sell into target, not at target. It's just you can't. There's nothing you can do there. Either you get lucky and you get filled, or you look at it in disappointment. I'd rather just sell into target and not have to deal with it, to be honest. Yeah, exactly. You see how we're now trying to offer POC again on the look below? So we need to be able to get over the 76 and make it supportive here, or this is just going to rotate back down again. We had a failure outside of value. We look down, and then the offer now trying to hold this POC to value high as our resistance, right? So if you're looking at this as a normal profile, this is that look in, and then your offer, and now your rotation. That's where sell side is trying to interact. So if you're looking for shorts, right, like this is the opportunity area where you have very tight risk to then try to trade down. That's how it works on a regular volume profile as well. So that your offer sits there and rotation off of the failure at the highs. But it can be applied on a very micro level. I hit PT, I'm out. Yeah, no, I'm not in anything. Just coming back down to our value low of the range. King of bids will step in. Need that push over value again for anything else? Yeah, because again, Grotto, like again with this is really important to be able to see. This offer now holding where POC was, and us being able to offer a failure above value is very key to let you know that there's a shift. Because if buyers are serious, we would have bid here. So as soon as we offer below and then get our reoffer, you should be expecting rotations back through. liquidity lower, yeah, there's a lot of potential. If we don't see a very strong bid that pushes us back over value here, a look below this 67 makes a lot of sense. Because we have people trapped off, right? So if you look at like Mario's setup of like the higher, what is he looking for in his rotations where we get away from this? We then look for exactly this, right? Which is a look back in and then playing through the rotation. This is his setup. Failure at the highs, back into our auction, rotation through the auction. Now you're looking for a look below and then a rotation back in and then continuation onwards if it's going to happen. But do you guys see this pattern, right? This is what we went over on Monday. This is that offer and then the rotation through the range. Yeah, exactly. That's the same thing we just said. It's support high.
Expecting
Right?
possible comments from
And then the failure back in. Right? That's
but keep in
the
mind
rotation.
they are making remarks at a childcare event, and so unsure that we'll be getting any monetary policy comments from either of these Fed members today.
And we look to see if buy side's willing to take in size here and get us back into our auction. This is our test. Either we do something like this and then bid through and then attempt for new highs, or this holds very strongly sell side and then we continue down. 5 minutes left on this candle. It's bad. Still trying to bid, get back into our previous auction here. Got a bit of a lift off of our first hold. Now attempting again. Very mixed here. Sell side in control. Russell falling. Need to see how we react at previous POC. I'd like to see buy side be able to show their hand as we push back down into this 920 area. If that doesn't hold, then I have a larger shift. We'll see. Let me clean this up. If we can try again. Same thing as before, you're just looking at that bid to step in for rotations through the auction. Either it works. Russell still attempting to sell. Need to see this buyer step in and get us back over shy. At our 59.20, NQ attempting to hold the 67 again. Need to see if this bid will maintain. Just stops below 67s there, or this rotation comes back down. Sell side still in control with low highs. Need to see the 67 to 71. Be able to start to bid for that push up and then recover. Looks like we'll be better off just waiting for the Russell to find a low first.
NYMEX natural gas August futures settle at $2.32. Diesel August futures at $2.51. Gasoline August futures $2.50. And NYMEX WTI crude August futures settle at $82.10 a barrel, which is up 69 cents or 0.85% on the session.
See if we can do it this time with Russell. Like to see the 6770 hold now if we're going to. Watch our POC retest here. Any strong rejections from POC on RTY probably results in this being the last attempt from buyers for a while. Right, we want to see this not reject here. Testing into it now. 6770 trying to hold. See if bid is able to withstand. And we can break these lower highs on ES and RTY. NQ still very much so in its balance here. Very choppy. Want to see a bit more from RTY for continuation. Or again, it's just going to be a lower high into our rejection of our halfway back. Move stops to at least break even now. As we push back up in the POC, right? Same thing as before. Now remember, what you're looking for continuation is the ability to build above the range, or something like this would be ideal. If it doesn't happen, then nothing's changed. Russell's still pushing. Yeah. And everyone else will be as well. We need to see either break and hold above our hive range, or expect like a liquidity grab below. It's really, can the Russell get over value high here and actually maintain? Can ES start to build above that 70, 72? All right, these are the questions we have to ask ourselves. I'm just doing this so that you can see the shift. So I think it's very clear. You see how our selling was here with the POC to value high? You see how our selling has shifted to here, POC to value high, at the bottom of our value area? You see what we need to do to be able to hold here for a reclaim? We need to see a bid be able to step in here and then rotate like this for continuation, right? Or this is just where sell side absorption is taking place at a lower high. Oops. Is this a cleaner visual between these two ranges and how we've seen that shift the auction here? Maybe turn off. There's this. You see on the rejection of the POC, we come right back down to value low, we bid, we try to get back up, we then see a rebid and a push off of that, that rotates back up. You see that or no? And like, we need to get over this pivot and get through this seller for anything more for continuation. So if you're unable, or if you don't want to trade this, all you need to do is wait for this to become supportive above. That's the only thing that we're looking. Because we know, like, if we can't get through these sellers who are absorbing here, right, we're going to come back down to retest the 66.75. That's the bottom of our range, right? So like if this holds and we see sell side absorption and lower highs here, push down, it comes back down into this, just right to where buyer value was, and retests. We need to see the willingness to bid in this area. Incredibly key for auction for it to push higher, right? We need to see the ladder raising, this seller get X'd, right? It basically offsides, and then we rotate back up to the sell before. It's a very tight and slow range, and so it's totally fine if you don't want to participate. I get it. But then it's just waiting, right? We're going to see the same thing here, where like this will become resistance at our 60s, and like then we blow. I'll just leave it on this view so that it's obvious. Back down to bottom of range here. That's 66.75, 67 level, just what we were bidding off of before. Either buyers are able to continue to maintain this, or we're going to get another look to our extreme. Just the bottom of value for this range. Very slow. 3 minutes left until 15s, new 15s. Yeah. It's finally. Rotation back up to top of range off the hold of 67. Again, need to make this supportive. Just where the offer is sitting. 1 minute until new 15s. New 15s opening now. trade first risk off. If you are trading off of that 67 into our top of range, need to be able to build above here, just as we have drawn. Yes, new high. Russell battling for value high. Huge. Nah, there'll be more moves. This was just the squeeze from all these people being stopped, right? So now you're gonna have a flag form, and then we'll see if we have continuation. Either you're willing to trade the balance play or you're not, right? So now that we've broken out of balance, now we have a continuation potential play. All good. Just look for active buyers now to step in to defend. Ideally, we now hold like this 87, 86 as supportive and are able to flag here. 86 to 81 is kind of now the new key for buy side continuation. Gonna delete this now that this has played. And we've got the secondary look, the bullish price action on the Russell right now, right? We didn't get our rejection at the top of our range. We're now trying to make it supportive. So if we can hold value, that's awesome for continuation potential. If we push back below value and need to rotate again, it's just not as great, right? We're just going to trade back down to POC. So really want to see active buyers preventing this pathing to play out, right? This was that bearish pathing. We want to see active buyers now defending this and being able to flag off of this and actually being able to push us in the market. We'll see how that goes. Again, for NQ, would love to be able to see this kind of just flag here, develop out. See how that goes. Again, I really want to see like our ADR high hold 86. It would be ideal. Just build out this upper node and not have to retrace this entire move. If we have to retrace, right, then it's just coming back down to 73, which is not ideal. Yeah, great job, man. Retesting our highs here off the hold of 86. Need to see if we can get through this offer. Top of range, right? First risk off if you're holding. Or just move stops up to now break even. You did buy off of 86. Now looking for the ability to expand. Russell still needs to catch this bid. Testing POC as we come down in. It's about your last line of defense we want to see hold. Again, this isn't very fairly late. We need to see like this area needs to stay flag off. What I'd want to see anything lower, then it's just going to rotate back down. I think. The Russell, we're so dependent on the NQ being able to just like do the thing. We're not seeing the participation we need as of yet. Which is why we're relying so heavily, because the Russell's kind of flat here and NQ is mixed. We have to rely on these like huge balance areas, and then we get pops based off of just the wrong people being on the wrong side of the trade, right? And that's how we're getting movement right now, is like extended balance and then squeeze and then continuation. And then when we don't see like active buyers willing to like really kind of step the bid up for continuation, we just get another balance area. It's just it's very tedious price action if you're not willing. Watch our reaction at 86. Trying to get back into this auction. Get over this node. Russell's still attempting to try to find this bottom at POC, but no real movement. If we don't continue to see strong bids at 81, I don't think you touch anything unless we come back into 70s and get a straight bid. Then you can try off this edge, or you just wait until supportive, right, for the secondary look. Like, we need to recover this low. See bids step back in. Very mixed. Russell is attempting the bottom. We're just waiting on NQ to get with the program now. Hopefully it's not too late. Russell retesting value high. Again, like the thing that I'm watching for here is this is just retracing our squeeze structure. We want to see bids step in here, ideally, this area, but we still do need to recover this low, right? That's what we're battling with now because of a deeper pullback. We're looking for the ability to form above this for a push and continue. If that doesn't happen, we have to deal with now an offer sitting where our bid was, and now these buyers being offsides. That's the issue. So seeing that Russell move and then push back over value is ideal if it's going to hold. What we don't want to see happen here, and what has a lot of potential to happen, right, because of these deeper pullbacks, is we've got our POC bounce. We need to get back over our value high here. If this doesn't happen, then rotating back down for the full range is likely, right? Same thing with NQ. Can't get over these buyers who are now sellers. Okay, now we're in a rough spot because now we have buyers who are offsides, and we have to come back down to where our previous liquidity was before squeeze happened. Hopefully that makes sense. That's just how I rationalize it. So the only way that you can play this area here is either setting a tight stop at the low, right, and looking for a higher low and bidding and being willing to get stopped out here for like $65 losses over and over again, or just waiting. It's really that simple. Like either you play the higher low and you bid here, and then you have your stop at the most recent low, or you just wait for us to break the downtrend and recover these buyers as supportive, and then we look. Because if not, then you're at this really weird area. It's an inflection point where we've lost the previous auction above us, and we know that there's an offer sitting there, right? So it's basically a coin flip, but it's a coin flip with a set amount of risk. Because if this doesn't hold, you're just coming back down to previous value. And it's the same thing for the short side, right? It's the same, like literally the same. And if that makes you uncomfortable, just don't touch it. Wait until we figure out which way we want to break. Watch to see if bid step in here where our previous value was off of the failure to get back into the previous auction. Very important area. We have now fully retraced the squeeze structure. Russell needs to be able to bid here at ETH high, or again, we will rotate through the range. We rejected our bearish pathing, right? We rejected value high. We are looking to see if buyers are able to maintain here or if they're going to get caught off sides. Another easy area where you can have basically $70 of risk, just playing off of the low, looking for rotations back up. The battle for 67s once again.
So NBC report that their own Lester Holt is to interview Biden on Monday.
Yeah, great job. Again, like as soon as we lose that auction, it's totally fine to play short for the push down. I think you have to take some profit off into 67. If we lose 67s, right, then we can continue down. But just back down to the basing of our auction. I really do not see a ton here unless we make like 60s go offer. I just think that this is noise. Like this is buy side absorption down here, from like 67 to 60. Like anything in here is just where we need to see if buy side's going to be able to continue to absorb sellers. If we can get below it, right, then we get like definitely can go for a continuation. But it's a good first risk off for this move. And now we just wait. Russell retesting highs off of another bounce POC. Again, in my opinion, this is just noise on NQ, unless we can push below 60s and offer it. With ES and RTY both holding our highs, it's just a return to our mean. Again, NQ's action is very much just like squeeze. Like we're just trying to get people off sides. So we've now returned to what I'm considering basically our mean. See how buy side reacts here. If offers can now hold, right, then we have a shift. If the offer can't hold below, then it's just going to be like best value buy for bids to then push up. Sucks that we have 9 minutes left on this candle though. Another rejection of our value high on RTY. It's continuing to just act as our overall kind of risk off for all markets. Yes, back to our basing. Big node here. Again, really just paying attention to seeing how we can offer here at our 60s. Because the thing is, like, if a bid steps in here again, and then these guys are just off sides and these lows, and then we recover this bid, and they actually are active, we're just going to rotate back up again. Like, we really need to see the offer mean where this selling delta is.
So the US Energy Department announces a new solicitation for up to 4.5 million barrels of oil for delivery to the Strategic Petroleum Reserves Bayou Choctaw site from October through December.
Clean this up for you guys. Did you guys see that Bunny from The Last Descendants is literally just Goss? Like, they just straight up stole the character. Like, she has the entire, like, the same set. It's like Goss and Vold had a baby, but mostly Goss. Yeah, and all the icons are just straight up from Destiny. But Bunny's like whole ability is like she has auras, and the faster you move and the more you move, the more the damage they do. Like it's actually just If like an update comes out that looks really cool, I'll probably just pay it, to be honest, or just make a new account. Not a big deal. The only issue is I really don't want to have to grind weapons again for level. I think 1999. I think it's gonna be sick. I don't know. I love the aesthetic. Mm-hmm. Byside is desperately trying to recover this. You can see that the 60-63 area is now trying to go bid. That's why I did this orange pivot. If we can get back over 70s, there might be something here, but this is our current range. You can see that these levels are just POCs from this is our POC from our previous candle off of this basing that occurred here. This 52 to 55, that's where we ended up bouncing. And now we are battling to get back over this huge balance area. But if these sellers are off sides and then we can push back up into this, I fully expect us to come through. I don't know, we'll see. But I really, again, like, we need to see like very aggressive sell side pressure to push us below. Or this is just going to be another area where we balance out and then someone's going to get squeezed. It seems like that's the only way that NQ is moving. Maybe try buying plat from other regions for cheaper. That's actually how I got banned. Hello? That's the mid of our range where we want to see buy side be able to be. That's where I was looking for buy side to be very active before. That's where they were absorbing. So if sell side can't get us below it again, and we're continuing to see bids step back in, we now have a lot of potentially trapped sellers, and we're looking for the basically active buyers to start stepping in above this if we're going to revert. I just made it an orange box instead of the brand drawing that I had before. It's just a little circle there. It's incredibly important for us to be able to recover supportive again. You can see the LVN we have above us just in this structure. It's garbage. The 50-50 short long area, right, where we broke below the auction. It's like we push through this, then it's just like, okay, we're just going to come back up to the offer. The way that I usually view this kind of stuff, Adam, is I break it down into like a low, a mid, and a high, right? And we know that we can look for bids if we can reclaim these areas and then risk off into these areas, right? Like that just makes sense. Like this is our auction current. And like if we're gonna lose the mid, the bid, and the mid, then like we should be looking for our offer to then reject this area. And that just kind of keeps everything a bit logical, and it gives you your first risk off if you are trying off of the edge low, right? Just think of it as like your value area. We want to see POC hold. This was our value area. The way that means that you don't have to get in at the bottom. You can just wait for this to then be held as support, and now you have an area where you have a defined area of risk. Playing up into these highs, or you're just waiting for that structural shift to happen where we're now holding, like an AVWAP. We're also bidding off of where our previous sellers were. Right? Like this, just like it, there's so many factors that can help you kind of form a plan, and just like defining areas like this can be very beneficial. Like if I just throw an AVWAP on the bottom here, we can see like it's just bouncing that. It's also just our orange band. Right now you have an area where you could be like, okay, we're looking for bids to step in here. Looking for bids to step in here. We've defined our areas, which means that if I don't take profit or attempt the areas, like it's on me because I have everything planned out. And it goes the same way for shorts, right? Like we know this is resistance. Our 15-minute halfway back, it's where seller's last offer was. It's the top of our range. It's our ADR. Like we need to then be risking off into this area though. Let's risk off. Range back down. Get over 73, I think you have legs to 81, but you're gonna have a lot of people trying to close out into 70 73. Minutes until new 15s. Watching that 3-bar structure here. Retesting POC from previous candle now. We go to 900. I don't know, man. Wish we had a bit more time on the day. Gene, do your first risk off. The 81s. Need to get over this. 8186, very important. It's just your offer above from the hold of 60s. Yeah, use well then. They're trying desperately. How many market buys up here? Look at this. Need to get through. Just so much offside buying here until we can get over 86. Lack of volatility is just so annoying. Makes every trade take an hour longer than it needs to be. Could hold a Russell value. Yes, new high. Nine hundred is definitely possible if we can get through this 86. This 86.90 is going to be rough, but get that MOC squeeze into close could be possible. Yeah, there's so many resting up here. It makes it really hard. I just don't know. We were runner. Let the MOC gods decide. Only thing that I was sure of is that 60-63 pivot and then 70-70. It's like very clear where buyers were there. So much effort is being exerted on this movement for like nothing. It's crazy. It's like, look at this candle. Just so much effort for so little. I feel like you just look for buy side at 82, 77. 82 is your first like real area. If buy side serious, below that, then it's going off. Really don't want to see these guys go off. Minute until new 15s. Needs to be bought immediately. Again, like if these guys go offside, so much effort was exerted there. If they just push us right through, it's rough. U15's opening here in a second. Failure to continue to bid here and get us back over 82 results in the 70s. Looks fine so far. Just battling with this POC here. Held our POC, previous candle on that retest. Again, just that 77. Buy side is attempting. See how we react into our 90s again. Someone very clearly willing to take in size there. Retesting now. Move stops up. MOC, yeah, very soon. 2 minutes. I don't know if you want to be in your trade in 2 minutes with MOC. You might be able to catch something else. I don't know. Up to you. I expect volatility in 2 minutes is all I'm saying. Yeah, ideally towards the upside. Move stops up into our 900. Hitting 900 before MOC is great. Okay, well, that was good. I'm glad we found a pullback level. Actually, it was solid. '58, 77, 83, or 82. But I mean, also like the 60s, 60 to 63 was also great. MOC happening now. Move stops up or close positions into volatility, up to you.
Taking a look at the market on close imbalance, the S&P 500, 180 million to the sell side, the Nasdaq 100, 325 million to the sell side, the Dow 30, 140 million to the sell side, and the Magnificent 7, 100 million to the sell side.
Good luck with your MOC trades. It's like 100 million. It's still updating, but this is what it was on. Got some room to ADR on RTY. Make that your target if we can get over.
So US stocks extending gains into the close here with the Dow Jones up 1%. S&P 500 almost up 1% as well.
Market probably runs until we get to ADR and Russell. That'd be my guess. Seven minutes left. What's your ADR target on Russell? See if we lose any momentum here with Russell into our target. Looking for 907 to hold on NQ if we're going to continue higher. We have 6 minutes left. We are into Mario's secondary target here at 88.50 off of the newsletter. Russell lost momentum into ADR and NQ and ES immediately sell. How did you just blow up your account? Are you kidding? Oh, okay. What did we do? You over leverage at Russell ADR? Again, this is where we are from the newsletter chart. Understand we are at PT for ES. $68 to 701, 702 basically is resistance for ES. Just a FIB target. It's quite a large area. All right. I don't know. 4 minutes left. I'm probably not gonna take another trade. Lost all momentum into Russell ADR, so. I think all you look for here, if you are looking to continue to degen, is just watch this LVN, look for buy side to defend. The Russell is like mid and small caps. Yeah, RTY is Russell futures. So if you type RTY, it's Russell 2000. Immediate bid off of our LVN on NQ. Need to see if 907 can hold. Again, I'm not, but it worked. 2 minutes left. There 20 seconds until close. Go Grotto. That is our close. All right, I'll see you all tomorrow. You guys have a good one. Any questions, concerns, just DM me or at me. You know the drill. Have a good night. We've been really like losing volatility midday. I really like recommend no one touching anything. Kind of sucks. Let's see how CPI goes. Some decent trades in the morning and then a couple nice catches in the afternoon. Again, like if you're going to take anything from today, I think we did a pretty good job going through finding and establishing reversals with trend with footprint. and then just understanding when balance is starting to occur, right? We know when strong trend is happening with our footprint with POCs off the 15. I highly recommend that you guys like, I mean, there's no reason not to have just even, it doesn't have to be on your main chart, but having a chart that just looks like this. I think they're really good reference points, and they can help you kind of figure out when like the downtrend is breaking. But being able to like recognize offside sellers at the lows, the shift of POC, and then us starting to build at our POC as retests for pullbacks, understanding like in trend, we will be holding that POC as supportive. In resistance, right? That POC will be our resistance for continuation down, right? It's a very clear thing where like we will not be able to close above. This is a downtrend. POC is our resistance. POC is our resistance. So when we start to see like a strong wick at the lows on a 15, we see lots of red selling deltas at the bottom. We see the next candle being able to hold POC. Like this is this right here is a very clear area to be like, oh shit, this is probably the end of our downtrend, right? Strong wick at the lows, offside sellers, POC holding on next candle is supportive. Strong buying deltas after that, right? Showing us a strong mother bar and breakout. Now we look for expansion. Buyers have showed their side, showed their position, right? Like this is a great area to kind of memorize this kind of structural stuff. And then and just looking for these pullbacks into our POCs from the previous candle, looking for that for continuation up. And then being able to be like, oh, okay, we're back into balance, right? We stopped with this with the trend, right? We're starting to have POCs holding in the same areas. We're looking for pullbacks. We're looking for excess outside, and then the re-enter of that auction and push off. I feel like we covered a lot of that today, but definitely worth going back and looking and referencing this compared to your actual charts on the smaller time. And that, yeah, have a good night. Same thing here for reversal. Another really good example with us having a strong wicking down into our previous spacing where our POC is. I think this is a great example of being able to spot that reversal. This is our 60, 63, right? Where we're looking for just a bit above. This just retraced back into the low at 53s, right? Previous POCs here, our previous basing from buyers. We have offside sellers at the lows. We then recover POC as supportive at that 60, 63. We are then able to bid off of it, and then we get our trend. Any questions, or are we good? I just want to do like a rough overview, review of the things that we talked about today, just so you have a reference. You can come back to from the VOD. So again, every session is recorded, right? So you can come back and listen to what I just said. But I'm gonna end it here just so that you find it easy. All right, stream's ending. I will see you all tomorrow. Have a great night.